something to the point like this. Ryan Cohen is not going to save their investment. Their equity's not gonna come back to their investment. There's nothing to buy. It's over for Bed Bath & Beyond. He could make his own company, he could do whatever he wants, but there is absolutely no value in Bed Bath & Beyond. None at all. And yet you're gonna tell everyone that he's still in the play. That is ridiculous. You have my number, Bill Pulte. Lose it. Delete it. Don't ever call me. I don't surround myself with individuals like you. Guys who can't get a fucking clue. For the rest of you kids out there, the due diligence has been done.
Guten Morgen. It is July 27th, 2023. We're going to be streaming stocks, options, and futures trading today. We're going to be watching SPY, TUP, MNK, GME, barbecue, whatever runners we have, using some technical analysis and practicing good risk management. We can make money. Sub up, like up, comment down. Happy money sticks around. Thanks guys for your support. Follow us on Twitter at HappyMoneyYT and our Discord server as well. Both are linked in the description, and I'll put the link for Discord in chat as well. Good morning, Macaron. Yes, I wanted to watch that little rants video. You're first. You beat Mo Lava. Imagine that. Well done, sir. There, that is pinned. SPY, big pre-market gap up. So the news with Powell was pretty dovish, as you can tell now. And it looks like we're going to be getting to all-time highs again. Crazy. I guess it kind of makes sense, since I think NASDAQ hit all-time highs again. I don't know if the Dow did or not. I've just been on a squeeze mission the last, what, 2 months? Let's see. Yeah, really picked up here once we broke out of this consolidation, more or less. Big consolidation. But yeah, May. Sell in May and go away. Everyone bought in May and stuck around. May, June, July has been just wild. That's right, CDB, I heard that. Yeah, I did watch it. Yeah, Pulte, like I said, I respect him. I think he's a good guy. I don't have any. I'm not reading into his body language and that others are as much. Pretty straightforward. Hopefully, is a good slap of reality for some people, maybe. You know, even the way they phrase their questions are much more. They like leave the crazy confident certainties of this and this and this when they ask him questions, and funny. But yeah, no, it was a good interview. Guess I didn't necessarily learn anything from it as far as barbecue, which I wasn't really expecting to, because that probably would be illegal. He was sharing something if he knew something. So yeah, one thing, I didn't realize how young he is. That's crazy. That guy's a kid. It's really weird. Like yeah, for some reason I did not think he was that young. He was saying like people our age and RC and like referring to the hosts on the show. I'm like, what? Aren't you? No, he said he's 35. Aloha, Maui. Yeah, that surprised me. BBIG have 3.8. Yeah, we'll keep an eye on it. At this point, I'd kind of like to see it make a whole inverse head and shoulders above this trend line before taking the long. So I kind of need to find 427 as support. Got a lot of interesting runners, a lot of gappers, and then MNK went crazy. I was saying yesterday this might be an after hours mover since it's so strong on the close. Right now it's up 76%. So that one's pretty enticing. I don't have a whole lot of day trades to be messing with this stuff. Today. Oh, I think I did one too many day trades yesterday on this account. Uh-oh. Thought I was fine. That's weird. No, it's crazy, CDB. He, his face looks like he's 47. His hairline looks like he's 25. And he's got wealth like he's 65. Like, yeah, I was really surprised how young he was. So GME might be a good long play here. If it holds up above here, it's looking pretty bullish. For a move up to 27 or so for starters. He's involved with Teddy just based on his interview last night. What happened to my... Yeah, see, Weeble's got it on here. It's got it on a steeper, because it's pulling it from the top of that wick. I was maybe a little more conservative with these highs. That's giving it a, yeah, similar price target. A little higher than mine. Alright, I got about 12 minutes to open. Market's pretty decided on where it's going, I guess. Are they? So, it's Thursday. Probably big Thursday. We've already had it. I assume it'll probably hold some gains. Hold most of these gains, if not close higher. And then Friday, probably same deal. So, consolidation here. Ripped out of there, out of that cup and handle. Consolidated up here. And now I think we are breaking out of this consolidation. So, expect to move similar to something like this. Next, I don't know, 5 trading days maybe. It could be slower, but I think we're gonna probably squeeze on up to these more highs. 467, maybe new all-time highs. Crazy. Then you can take your shorts. Excuse me. TUP going to 4? Let's see, filled those gaps. Or where it opens going to be above. I don't know. Maybe eventually. I have some profit taking coming into this weekend, given how much it's up. One last little pop before it. Maybe try and catch it next week. Go jacked. You have a position. Okay, I got about 5 minutes. Okay, 3 minutes here. Right, there's the bell. Eyes up 0.76. GME is up 6.2. Barbecues opening up flat. It's good. And there's a little dump on it. Down to 37. See if we can hold yesterday's supports. Top board's up 15. US is up 17. Overstock's up 15. Not sure what's going on with Overstock. I'll bounce there on SPY. Yeah, see if 30 cents holds on barbecue. What's that news on Overstock? Overstock says Bed Bath & Beyond launch in Canada has been a success. Interesting. Second quarter, 22. They had earnings? Oh, they had earnings. Okay. Great success. 13% on Tupperware. There's 30 cents on barbecue. Down 5 1/4, 29.59. BBIG is up 3.8. Sorry guys, I'm working on something else right now, kind of ocupado. GME up 1.3. Yes, I like that. Let me get some GME calls. Not usually a good time, but geez, these spreads are stupid, even on the monthlies. The heck, man? I hate GME options. They really wrecked them. Barbecue down 4.6. See where we're holding. Okay. I try never to buy calls in the morning or any options, but yeah, I did. I just got some GME ones. I got August 25 calls. Really would like to see barbecue bounce here. Tilray's up almost 10. Okay. Okay. There's a little bounce on barbecue. Sorry, guys. Didn't want to break that 30, but little margin for still think it's flattening out here. GME's up 1.5. I don't know how Weeble comes up with the time frames. Is it based on how much time it took to build the pattern? I don't know. Aloha Maui. Morning Archer. Bought some leaps on GME. Another AI wave? Just wave after wave after wave. Well, I just chopping around. I mean, it's up almost a full percent pre-market, so. Turns out he had nothing to do with barbecue. Bought some TUP yesterday too. Nice, yeah, it's looking strong. Kind of assuming there'll be a bit of a sell-off into Friday, but it could keep rallying before then. We've got all day today, and could start before then, but BBIG, let's see here. Nice, yep, this is what I want to see, a little inverse head and shoulders. You could see the trend starting to taper yesterday when we had these lower highs were less aggressive. You know, it left this trend. Turned into this. A 42.7 is resistance. And then yeah, I might be down for back into BBIG on some bounces on 41. If it so pleases. Up new high there. NTRB, yeah, zips pick. MNQ hanging out, or MNK hanging out up here. Up breaking out. Excuse me. I didn't take care of my throat last night. Had a couple beers. Celebrating with my wife. Had to. Okay. We got some resistance at 25 there on TUP. An eye on BBIG. Next up 2.2, 2.4. Sure like it. Good morning, Guts. Yeah, I'm liking GME now, Rally. It did break that resistance, and so yeah, cup and handle I think is pretty well confirmed at this point. So I would think a retest of 28, 27 area at least, and maybe a big rip out of there. SDC is up 7. There's 9% on BBIG. Alright, let's see if it uses this as resistance. You've got your inverse head and shoulders now. Oh, shoulder was quick. Look for resistance and a pullback. Barbecue hanging around that 30 cents. Still looking good. I want to see it flattening out. That's totally fine. Lots of water. Yeah, I'm going to have some tea probably. Morning, Mo. Yeah, it's kind of a headache. Feverish. TUP, yeah, TUP breaking out of there. I'm not trading TUP because if I was, I'd be day trading it. I'm not gonna be day trading it today. But yeah, I mean, between now and profit taking potentially on Friday, you could see 3.5 on it, 3.7. Market is primed for some crazy moves like this. A lot of hot money running around. Same with the MNK. Barbecue, don't do that. Don't like that. SPY's coming down a little bit. Some resistance on BBIG up there. Open dish wakes back up. $9.50. Could be catching support from over here. Want it to kind of hold above there. You've got to head and shoulders. BBIG, no retrace, huh? Gonna do it like that. I'll let that one get away for a bit, that's fine. Tim's up 3.3. Zoom's up 2.6. Red candle there on top. Testing that breakout. I don't on GME. I'm not thinking it's necessarily going to run. Like it'll. I mean, it might have a couple big candles, but The move up, I'm not sure how explosive it'll be. It could be nice and mellow like this one. Or not nice and mellow. Just lame and mellow. Where your IV never really increases. Just slowly grinds up. Excuse me, TUP back to PWAP. Dang, BBIG, holy smokes. What? Well, it didn't suit me. Wasn't my trade to take. Not that, at least. 18% on there. It made the inverse head and shoulders, but it's just, yeah, I didn't catch it. I thought I'd find a little resistance and build a little liquidity here first. No such luck. I mean, really, it just played true to breaking that range. It just ran out of time yesterday, right? That downtrend from yesterday broke above it, end of day, but it was just very mellow. And then there was no more time left. There's that next resistance point, 4660. This thing might want to fill that gap today. 20%. Oh, I got filled on my other dish calls, I think. Yes. I got some 9 calls on dish also. High on BBIG? Probably the high made here. Or here. Looks like it's going for that gap fill though. There it goes, breaking through those resistances. $5 is a gap. %, on it. Really, this thing opened at the right shoulder. That was all it needed. I guess a break of this resistance would have been a good tell. Yeah, we were waiting for it, but it's too hesitant. Excuse me. Iron Net's up 8. Getting the day traders and stuff in here on BBIG also probably. I think this could have a sustained rally after today. You know, on the longer time frame, it's in a nice bull flag. So wait for it to settle down this morning. VWAP is so high on that. Wow. So you could say it's maybe built a cup here. It's a little bit higher. That's why I was thinking to come up to here to build a bigger cup. We'll see. Yeah, it might be going for this one up here. But I'd get in probably on a handle, which would probably be about this price. It's at right now for support. But that will prove this rally will sustain. Yeah. QS is up 38. Is this from earnings? One of you guys were talking about a QS yesterday. TUP and MNK selling down. 48.80. So we have that as resistance. I don't know where that's from. Maybe a while ago. Whoa. $480. Yeah, okay. VWAP's at 4598. I'd like to see barbecue hold this support. So the lows here, you saw I just drew this morning. The lows keep getting lower. It has slowed down though. Downward trajectory just hasn't fully flattened out yet. Because it was on a steeper path here. Won't draw it, but... And then it's kind of shifted to these, as well as the highs. So, kind of looking for a breakup here now. Maybe to add. Aim for the Q, stayed for the Barbie. What an explosive move on BBIG this morning. There's BBBYQ back to VWAP. Do you like it though? What kind of retrace it gets here. The cup is a little funny looking. We'll just see what fib retracement we get. High's coming down a bit. Has a big gap down there if it wants to fill it. TUP consolidating up here. And I'd like to take the long, I just wouldn't want to get stuck in this thing today. Might go along with shares and then sell calls on it. That's one way to just stay in it. It's $60 for next week. BBBYQ down 6.5, 29.22. BBBYQ consolidating up here. Up above VWAP. Buy's coming down. Barbecue 29.11, down 7%. It's too quick to buy back in. Soon. By the scaling helps. Rival's up 8.25. Okay, looking nice. We're consolidating up here. BBIG below VWAP now. Day traders are getting out of it. Overstock had earnings. And they said the Bed Bath stores in Canada are doing well or something. Oh, nice. You have Overstock. Well done. I watched the PP show. MNK. See if Barbecue gets a bounce here. BBIG coming down. Still just melting down. There's there's a 50% retracement on BBIG. Dish is up 1.6. Barbecue still down 6.5. 29.20. Don't we have a... Is there another court hearing tomorrow? Tomorrow's kind of a big day on barbecue, isn't it? 1540? What's it say? My put's good. Not necessarily. I think in the longer term, but we're still very bullish. So the puts would just be shorter term to capture some of this liquidity being built, most likely for the bulls. So it depends on your time frame. Practice good risk management and pretty much flip a coin and you can do well. We get to move back to VWAP and it rejects. Maybe puts. I'm looking at going long here though on the futures. Potentially. Yes. Whoops. Yeah, I just went long there on the futures. BBIG, nice little bounce there on, might pick up some shares. Start scaling in some. Okay, I grabbed a few BBIG shares there. I'll keep an eye on it. We come down more. That's 61.8. Probably pick up some more. Barbecue new low, 29 cents. Dang, man. Might be looking for a bounce on barbecue to close back out or scale out of some of this stuff. VWAP bounce. Hold some. Close some. I'm liking that it's breaking this downtrend also. Probably getting close to support. There's another flush on barbecue down 7.9. Is there some bad news in those dockets? Down 8% on barbecue. Seems like something's in those dockets. Maybe not crazy bad. It's not just completely flushing, but it's a pretty big drop. Alright, I'm out of that long. Barbecue's still coming down. 240 leases rejected. Sure, they'll figure out how to look at it as bullish. Yeah, there's almost 10% down on barbecue. It must be from one of those dockets, I'm assuming. More news of shareholders not having any value. Bullish! Looks like docket 1540, Judge P accepts debtors and DIP request to shorten time period for notice. August 1st. Debtor must serve all docs by 31st of July regarding the plan. Is this the dip that's not getting bought? Maybe because it wasn't free market. Is that confirmed, Christine? Only 40 to 60 leases left? I mean, there's still a chance. Who's that, son of Pulte? If we're sticking with this trend, we come down a little further, I suppose. Buy's coming down there as well. Not liking any of the setups today. Yeah, the million shares is short. I don't hold out with a whole lot of value as to price action. I've seen it go the opposite direction. More shares available, lower borrow fee, and it rips. Who's Bert, son of Pulte? Is CMO Chief Marketing Officer? Chief Marketing Officer. Did he say that in the docket, or when did he say that? Spy melting down. BBIG did break that low. I'm consolidating here. Like we're looking at a later day bounce play, maybe. Is that on LinkedIn? Was that recent? Yesterday. So it's confirmed there's only 40 to 60 leases left. A nice, Ronald. I wish that on people. The flush on SPY. Well, I'll probably close some shares here. That doesn't sound good at all. Once again, TA starts to look good. Boom. Bad news bears. I hate to close at the lows though. Potential lows. Let's see it bounce to VWAP at least. Future brand? Yeah, you were talking about that the other day. Someone was. NTR. Oh, that was that ZipSpic? I haven't heard anything about it. It's NTRB. Headline increase. I don't see anything on here. Kind of just watching barbecue get dunked on this morning. Nice consolidation there on BBIG. GME sold off with the market. Just seen that one coming. Never heard anything, Ace. You guys still clamoring through the dockets? Of course, all I'm seeing on Reddit is bullish stuff they're trying to pick out. just such an echo chamber. Lock at 1534. Talking about post-bankruptcy emergence, net operating loss carry forward consultation, ownership change. Probably just standard talk. Why can't one subreddit just be unbiased? And not just 100% this way, 100% that way. I don't know. Fish is up 1.25. We watched some of that video this morning on stream. I just listened to some of it. Hope to lose his number. Oh my gosh. Emotion driven man. Weak. Yeah, this is not getting any bounces to VWAP yet. Consolidating. Hey, Julian. I don't know. I think it's from dockets. More bearish dockets. GME is gonna just kind of move a SPY, but I think I think it's squeezy. So intraday though, if you just close your eyes. Matters is end of day, day-to-day close. Which way you're going. Unless you're trying to day trade. Corporate employees last day. I don't know, Julian. I guess a bunch of dockets dropped and people are siphoning through them. I don't know. Christine said only 40, 60 leases left. Check on which I mean, to me it was never like, I don't know. Was that even necessary? Bullish. A little bounce there. Distribution centers, yeah. Yeah, hope still a thing for sure. I mean, it seems like less and less hope as dockets drop, but people are pulling out bullish theses out of them as well. So you kind of just have to put blinders on and go for it and look at everything as bullish, or see it for what it is, and then you don't really see anything bullish. The SQH is up 20%. This one had that big move the other day. Oh, this was the D-SPAC. Yes. 3 distribution centers left. I mean, I don't know. Who's to say they couldn't do something even if it all gets technically bought? Because there's still periods of time where it can be reversed, right? Or a bidder comes in or whatever. It's not final till it's final. Fat Lady hasn't saying. If it was, this would be probably suspended. So, still trading, still hope. That's probably the simplest way to look at it. Blink. Overstock. How much do they beat by, you mean? Or what do you mean? They beat, and then also I think they liked, they said that Bed Bath & Beyond is doing well in Canada. I don't know if they did that on their earnings call or what. I like it when they tell me what they beat by. So, $1.63 loss per share. I guess that beat. Oh. Beat by 2 cents. 73 million loss, which was better than expectations, potentially. And that's true. RC came in the last minute. Yeah, I mean, he's gonna want to get a discount on whatever he gets. Anyone would. So yeah. So really, you have to expect each docket, excuse me, each set of information will probably technically be bearish for a shareholder. Whether you listen to someone that's showing you that it's bullish or not is a different story, but probably bearish for a shareholder until you get big news, which, you know, if that ever comes, of, you know, shareholders having value with a buyer or whatever. And then you'll know, because the stock will go insane, or it'll probably be halted and like just resume up high, even if there's like a buyout price or something. And same thing with the other way. If that never happens, it'll probably just get suspended where it's at, and what you have will be worthless. But I could be wrong on both accounts on that. That's just an outcome that I could see happening. Little bounce up to VWAP on barbecue. It's trying. Buy back to VWAP. BBIG pop back up to VWAP. Trying to get a little bit cheaper. Such luck, huh? This resistance maybe just became support. The steeper trajectory resistance. Well, we might be setting up a bigger inverse head and shoulders here. We have a head, we have a shoulder. I don't think they, let's see. Let me check. Check for you, cool. Just for you, let's see. Weeble. Yeah, I saw him drinking OJ. Was that orange juice? It looked like crappy orange juice if it was. No. Operating income was negative 8.36 million. Maybe beat estimates, I'm not sure. Total revenue was 381 million. I think this is updated, I'm assuming. Wait, Q? No, they're probably reporting Q2, right? Yeah, I don't have the numbers yet. 73.5, is that the same? Barbecue bouncing back up to VWAP. Buy one to break out. BBIG maybe as well. Might pick up some more BBIG. I wanted to get cheaper, but 4 charts. Yeah, I don't. I've got other screens that I'm not. You know, this is, you're just seeing a capture of one of my screens. We got two other monitors. So I do watch other ones. These are the main two, I guess, that I'm watching, that I'm showing on stream. I technically don't have to watch SPY, but I have another SPY one going on a minute chart. But I have this for you guys, I guess. But I can change it. I don't think I want 4 on here, though. It's too much. See if SPY holds this inverse head and shoulders. Doesn't look like it's going to. Or maybe. I'm trying to watch BBBYQ also. There it is. Okay, I picked up a couple more BBBYQ shares. Closing out of this long on the futures. Small choppy day so far. No good setups that I like. A little bounce to VWAP and back down. BBBYQ still around VWAP. Excuse me. Barbecue almost made it to VWAP. Zip was hyping Alphabet? Really? It was funny, Ace. I know, I was surprised no one was laughing at that. He's an interesting guy. Yeah, Mom, it has a big enough following. When he mentions something, it pumps, and then they take profit. So a lot of the stuff ends up pumping and dumping. In the long run, some of the stuff, yeah, might work out. See if we get a double bottom here on the spot. Yeah, Hammy, it's gotta win out. I've got a pretty big position in barbecue right now, so I'm trying to figure out what I want to do with it. But yeah, BBBYQ, I'm keeping an eye on it. I missed the rally this morning. We even called inverse head and shoulders, broke out of that trend. I'm like, all right, waiting for it, and just went so quick. I was like, oh. I was kind of thinking it might hit resistance and come down and retest, but it had way too many eyes on it. Day traders just pumped that thing up, so that's okay. Picking up here. Longer term trend on it still looks really nice, so probably doesn't matter a whole lot. A few points here or there. Nasty blur. You bought NutriBrain? I'm still like in Tupperware. I don't want to buy it on a Thursday when it's already rallied hundreds of %. Buy it on like a Tuesday. Also costs is down. Let me look at my notes here. I wrote down some stuff yesterday. So I liked TUP. TDOC, that's right. I wanted to get back in TDOC. Look at that thing. It's still going. Wow. They're insider buying? Wow, I could have held my calls. I mean, now it's just like, is it chase? done everything I wanted to do. It broke out of that since. Jeez. So I got him TUP, TDoc, cost, and GME. Look at cost. Cost is down 4.5. BBIG kind of rejecting VWAP there. It juked me to pick up some more. But VWAP. Barbecue almost back to VWAP. We have an RSI divergence there. Hmm. That's warehouse rental. NTRB. Yeah, there you go, 21%. Nice ace, well done, man. Looks like SPY wants to fill this gap. There's just not a whole lot of entries. I guess VWAP. Look at that VWAP, man. That's so weird. Look at how low it is. What happened here? Look. It was like flat. We made it to VWAP and now it's... Wow. A lot of volume today, I guess. Yeah. Yeah, SPY flushing there, filling the gap. I think I'll wait for, I don't know. That VWAP is so low, there's so much volume just pushing this thing down. BBIG still back up at that VWAP. Up 20%. I hate to buy it up here, but yeah. Are coming into the weekend also. BBYG starting to rally a little bit there. Should probably not buy any more. %. There's 470 on BBIG. Barbecue 2865 down 8.3. Nice ace, well done, man. Yeah, you can always get back in once it loses its pump. Tupware looks like it's wanting to break out soon. BBIG back down to VWAP. Things fish going on. That's funny. That's funny, John. What are you saying, Lords? Don't even understand what you said. Really not filling orders? What are you, liquid, man? We do have court tomorrow. Okay. It was a mental stop loss. But yes, it triggered. It triggered. It's annoying on this one. Running TA. Just because you get information that comes out. TUP did break out there. 29 cents or $2.90. Yeah, you just like it should follow TA and then you get news, of course, so it's like trying to do TA on a stock that could have earnings at any moment. 33.72 I think TUP could make it to today or tomorrow. But probably today. So there was like a bunch of dockets that dropped this morning, Lords. Saying they're only going to have, I think, 40 to 60 leases left. So, doesn't seem very good. But, yeah, I think all the dockets that are going to come out are going to continue to be bad until it's either a really good one or the last bad one and it's over. Probably not going to be an actual good one until it's like the best one. even if people try and decipher bad ones as good ones. I don't think BBBYQ is going to 100, no. I think it's going to 249. Good. Browsing the share. Yeah, you can't look at the borrow fee and it's self-reported. It's like it's not that direct. You can't attribute stuff to that. That's been my experience with GME over the last few years. We used to, and then it was like, no, you really can't. BBBYQ kind of coming up more, building this cup. SQH up 16%. Bum, this neg play didn't keep moving. It was looking so good. Neg launches computer shopping chat GPT plugin. Is that what started this? No. Could wake back up. My last meme stock, good. I mean, you can trade other ones, just go the opposite. Great shorts. Yeah, I think I saw that zip video about Google adding it for search engine. God of internet. Buy coming down a little bit, close to the low of the day. Like Zim is kind of starting to rally. Yeah, Zim's taking off a little bit, 5%. Calls are pretty far out of the money. Yikes. Up 3 1/4. See a big pullback on Teladoc. TUP's still going. Yep, TUP's breaking out again. Another little bull flag. 37.20. Let's see what happens up there. MNK is consolidating. BBIG starting to rip now. If it makes a little cup and handle up here, it just blows through this. It might, because this was kind of a pit stop. Might just come all the way back up here, make a larger cup. At 520 level or so. I guess I'm just dip buying on it today, so I'm not selling anything. Bad for the stock. Yeah, that's what we were looking at, Cameron. Looks like there's only 40 to 60 leases left. Is that what? That's what Christine said. How does that make you feel about it? If you hang your hat all on one thesis, you know, that's all it takes to, you know, that's the difficulty with that. You're basically holding barbecue till it's suspended, whether it's for a good reason or a bad reason. 0 left. So that notion is totally gone now. What was the last bearish news that we got that they are all stoked about? Oh, the auction being canceled. But this dip doesn't look like it's getting bought as much. There's Tupperware, 29.70. A little more to go. BBIG. Maybe making a cup here. Flushing down some more. So that's another notion, Cameron, that who's there right now is going to keep the company around. What if it's someone else? They come in the last second. That's kind of the only hope at this point. No, I don't think he did either, Guts. But why do you think he's going to dip today and tomorrow? Coming into Friday? Does Friday dip? What I don't like about it consolidating down here is it's building the head and shoulders now. Given we're still in this uptrend from OTC. So it really need to break this. Break this to change the longer term momentum. A retest of here is quite possible. Just, yeah. I don't like that it moves so much on the dockets. At least that's what it seems like. When do those dockets come out? Because it didn't drop pre-market. They come out since open? There's the cup on BBIG. See if it makes a little handle here. I might close my Zim calls. I'm liking it though, it's kind of breaking out there. Last sliver of hope. River has no money. That's pretty awful, Cameron. Just tendency, yeah, Thursday, Friday dip. Yeah, I mean, sometimes you get a rally at the end of the week. So, the Thursday, Friday dip thing, look at that SPY bouncing right on my line. Thursday, Friday dip, I feel like it's more often after we've had a rally that week, you know, as with most stocks. Whereas this week, we've been just selling off since last week even, so, I don't know. And then I saw that start to break resistances yesterday. So I'm tempted to take the long here. Looking for a little more of a breakup trend and then Yahtzee. Don't trust HVAC industry ripoff. That's funny. I thought the sentiment after his show was that they're all hyped with all his body language and they're like, you see how he twitched when they said Teddy and how he smiled? Maybe inside, deep inside, they're all like, what am I doing here? That's what you're saying. Might not get a full gap fill here. Up still going, there's $3. MNK is not. Look at BBIG making this handle. I pick up some more. That's engulfing candle in the 5 minute. Doesn't matter a whole lot if it's just a handle here. This might be as low as it needs to dig though. It's 23.6%. It just hit. Guess yeah, I'm looking at the wrong. This is the cup and handle I'm looking at. There we go. That's 38.2. 50% would be about VWAP. That's the high. Yeah, maybe another VWAP test. I'm not getting the options yet on SPY, but did go long on the futures. Maybe too early. Options, I'm only doing one trade, so one entry. Gotta be perfect. Close to perfect. 10% stop loss. Once that's triggered, then it's over. No more trading. Thankfully I can scale out though. BBIG, bounce in there. Bounce there on SPY. Like to see it break VWAP. Good add on BBIG. Not sure if this handle's done or not. He's lending money outside skirts to RC. You think Pulte's lending money to RC? Uptrend tap at the lowest coincidentally on Thursday and Friday. Yeah, this is kind of the last support right here on the longer time frame. I mean, the thing can still keep trading how it has been. It's been trading in bankruptcy, so no leases left. Maybe, I don't know. Doesn't seem good, but nothing about it's been good. I'm not bullish on it, but it's a full flow sell. I don't know, Mo. I think that's reading into it quite a bit. He's no dummy. That means he's still in it. Teddy IPO pumping up. Bullish on Pac West, huh, Cameron? Alright, it's fine. Kind of not doing it yet. Back out. I don't like it yet. Too soon. There's a lot going on, Lords. I'm trying to keep up with all your guys' partial sentences and trying to be cryptic and leaving, I don't know, innuendos and nuances. Those the words? BBIG? You're not being cryptic, you're just not using full sentences. And when you type something out, you have to type it out like you're writing a book, not like you're talking. Since we're not having a conversation in person, there's no body language, there's nothing. For me, at least, you can kind of hear my voice, you can hear little tones of this or that. With just text, there's nothing. That's why book writers, authors, some would maybe call them, you know, it's a gift. Not anybody can just write a book. I don't know what's going on in your head when you write these words. I just see words. I've gone back and forth so much on barbecue today. Like, I know it's gonna bounce, right? Yeah. It's still trading. But yeah, maybe a little more pain tomorrow. You might be right. I have to reach all the way down here for this level. Spy is it? It's moving very slow. I think it still wants it though. Give it another shot. Get more confirmation, I'll get the options. Looking at dailies, 458. Okay, so still a cup here. BBIG. Come down a little further for handle. Eyes rallying up a bit there. The little inverse head and shoulders here now. This did break out of this trend. Barbecue's coming back down. Down 9.3%. GME finally popping. No, only 90% or 0.9%. I like GME though. I went long. It's just starting to break out there of that resistance. Weebles is a little bit more aggressive. Mine's more conservative. Use these 2 points, the high wick here and the high wick here. It's been broken out for a bit now. I'm using this trend, so really today's the first day above it. So yeah, the longer time frame, cup and handle. Whoop, handle, and break out. Kind of an inverse head and shoulders that could be building here too on it. The bottom. I don't know why you think 18, Lords. You never said any reason why 18. Where does that come from? But it's early. It could be very early in GME, so you gotta be careful because just starting to show signs that it's gonna go that way. Volume's still low. I mean, if the market starts pumping, GME will too, and I think the market probably will. Al was quite dovish, and I mean you can see the reaction with the pre-market, a huge gap up. So don't worry about intraday. Like whatever, will fill gaps and go around, but I think we're probably going to be potentially hitting all-time highs again, at least retesting it. So with that, you know, that's the kind of push that GME needs. I don't think it's necessarily going to be a big move or fast. It could be a slow grind back up here because GME sucks now that it's fixed. From TA, what TA says 18s? I see no 18s TA. If it breaks this right here, if it breaks this, then yeah, I think probably lower than 18. Or no, I guess that is 18. That support is what you're looking at? Right here, this support. We haven't broken this yet though. Very well could get a bounce before here or on here. Excuse me. But I mean this is just like TA, but we're getting dockets that are dropping that is causing stuff. So that sucks. BBIG digging a little deeper there. Below VWAP. Usually 50% is the retracement on handle, or usually it's not more than that. So there you're starting to see it fight a bit. Yeah, we watched some of that Marantz video this morning. The deleted one. I shut it off once he started cussing. I think if these dockets didn't drop, Lords, we would be up here. We'd be above 30 cents today. And potentially even higher than yesterday. We'll save it. Yep. Once something's on the internet. Always on the internet. You got the Wayback Machine. There's lots of ways to save it. You know that. Mm-hmm. Barbecue never really made it to VWAP. That sucks. Who wants to be near him? I'll pick up some more BBIG here. Very slow price action here. Okay, I picked up some more BBIG. I've got enough. I don't even need to watch it. Dish is flat. See if Spy can make a move here. It's either a cup and a handle or just a double top. All depends on if you get some formation here of a reversal, the upside. This little inverse head and shoulders. Sucks it's Thursday though. Another bull flag on top. Here's the retest on that right shoulder. Here we go, BBIG. Alright, I think this is a cup and handle that we've made. Been good. Well, inverse head and shoulders. VWAP support there. For retest of the high, at least. Or, we already got it. This was the cup. Here's the handle. And... but no, this looks more like it. Don't like that it's Thursday. This one. This one worked out too. Just about 50% retracement. I stopped out of those long futures. Small losses, big gains. BBIG, little green candle. Barbie coating down here. Down 10%. The Tupperware, there's a breakout on Tupperware. Off of that bull flag. A few more points to go for 37.20. Like spies, maybe wanted to fill some more gaps. Or is it gonna hold that right shoulder? Just a little stop hunt before it rallies. Maybe. Very choppy. just gotta be patient. 11:47. The EU closed, what, 15 minutes ago. BBBYQ still hanging out there, building up some liquidity. TUP breaking out yet again. $75%. Coming back down to the lows. It's got a little head and shoulder here. See if we break the lows. BBBYQ just bounced around VWAP still. Up. Reaching for that 37.20. Reaching. That's too bad, man. No continuation on Dish yet. Wonder if any of those guys took profits on Wall Street Bets. I saw a follow-up post from the guy that originated it. He said he only lost, what, 20%? Which I'm kind of surprised he lost anything. I don't know why he couldn't have made money on that. His calls were up like over 100% before the news even came out. And then it gapped up. He just didn't sell any at open, I guess. Those calls should have been up much more. Top profits, nice. Well done, Smith. Lords, you think it's going to 18 and then 10? You're not even calling for a bottom at 18? I'm looking out for this line right here. Big support. BBBYQ went up, kind of retested the high there. No breakout yet. So have you closed your position, Lords? 33.40, another bull flag on top. MCOM up 25%. SPY looks to be flattening out. However, there still is head and shoulders. Double VWAP. MACD still bearish. Oh wait, that is an RSI divergence actually. Yeah, because that's a lower RSI. It's a hidden divergence. Okay, I'm back out. Ah, wait. Yeah, I bought some yesterday. Lords, that's right. Around here. I didn't sell at 315 though. I sold some this day and some this day. Just because you want it to go to 18 so you can buy it doesn't mean it's going to. Hey, Isaac. Nice, well done, sir. Yeah, there's been a few people talking about TUP. I guess you were probably one of them. Yeah, it's looking good. How come you only got 1,200? Pretty crappy day for trading SPY so far. Gold is back since March. Oh yeah, then it dumped. We're back to March prices. You were liking the dump. This was on them not having a timely filing, the SEC, right? That's what that was. Price cuts and then, yeah, delayed filing, delayed their 10K. So you were telling us in March, how did you get it 18 for an 87-cent cost basis? You must have averaged down a lot, because that was $2.50 then. Another bull flag. Still hasn't hit that 37.20, but I think it's probably on its way. Walmart? I don't know, I haven't looked at Walmart in a while. You've got earnings. It'll probably rally. You got a bull flag on a breakout. And then you have earnings. So you get a pre-earnings run up. You have a technical breakout on a bull flag. I think the market's gonna pump. Before earnings, I'd go long on this. And I'd close before earnings because I don't know what's gonna happen at earnings. World's biggest nerds? Probably, yeah. XXII up 8%. Looky, looky, looky. That one looks pretty nice. Runs down 6.5. Nirvana's down 5.8. Room's down 5. AMC's down 6. Let's fill in that gap.
We'll start out the show with we'll finish the show with Intel and that beleaguered semiconductor stock. So before we do that, before we bring in Nathan Peterson, let's take a look at the four major indices and see where they sit at 11 o'clock Chicago time, 12 o'clock Eastern. The S&P 500 up above almost, we'll call it 0.4%, 20 points to 45.87. The NASDAQ 100 up 1.25 points, 193 points to 15,693. The Dow Jones Industrial Average is up
we're reaching
just a smidge, 18 points.
You forget rejection up here.
5,537, and the Russell 2000, the only of the four major indices in the red, down 0.25%, 5 points and change to 1975. And some change.
Nice, Lords. You figured it out.
In my co-host for
you nailed us all.
He is the director of derivatives analysis at the Schwab Center for Financial Research. That is Mr. Nathan Peterson. Nathan, thanks for coming on the show. Thanks for spending the hour with me. Tons to go through. It can be data. It can be earnings. It can be the Fed and Jerome Powell from yesterday. Nathan, if you could sum up the last 12 to 18 hours, what is it that you think is giving this market a lot of comfort here? The VIX lower, market higher. What are you seeing, Nathan?
When are you taking profit on your TUP?
Continued resiliency of the economy that is supporting the bull thesis that has been in place. Really converting a lot of those bears. I saw Mike Wilson from Morgan Stanley this week basically said, "Yeah, I'm wrong," and so he's kind of shifted his view as well. So it's just continued. You could talk about the durable goods orders, the GDP, the jobless claims that came in. The Fed, I think that was basically as expected. No surprises there. I think the market feels like they're likely done. That was the last one, but we'll have to wait and see. Kevin, the thing that stands out for the price action
market thinks
today,
it's
though,
done?
Is we ran up to that 4,600
We haven't hit
level on the S&P
5.5%.
This is a level that 3 times back in early 2022 that the index ran up to and basically reversed.
There it is.
So that's our
Final push for the day on
resistance level that
TUP.
we're kind of contending with right now. We also have a bit of a negative divergence on the RSI if you look at the NASDAQ 100 or the S&P 500 there. And, Kevin, we're at a forward PE of 20. I think it just gets a little bit difficult to, what's going to take us to that next level up? I mean, everything's good. Bullish thesis intact. Let's say the Fed is done. Let's say inflation is decelerating. Forward PE is 20. What pushes us to a 21, 22?
Yeah, believe me, I think, I don't know if we're done, Nathan. I think Jerome Powell alluded to one more rate hike when he said, at the last meeting, the one before this, our group decided that 2 more rate hikes were appropriate. He didn't really back off from that, although he did say, we're closer to our destination. Didn't say we're there. He said we're patient and resolute. I thought he gave the market, as he always seems to do, he gave the market information that they consumed and digested in a positive manner, right? He didn't hurt, he didn't scare, he didn't do anything to make the market jittery. You could see that by the metrics. But, Nathan, I'm going to come back to you in a minute. First, we're going to bring in, because Meta had great earnings. We see a lot of great earnings today, but one company that we really were reporting was doing extremely well. It didn't have good earnings yesterday, and that is Chipotle. Jenny Horn is coming to us live from the TD Ameritrade newsroom.
Did 100% on
talk
calls?
About this name. Jenny, Chipotle.
Yeah, a little pre-earnings run up.
Burritos not doing well? What's going on here?
Apparently, avocado inflation
Hope you,
is like the
took
biggest
profits.
story in Chipotle over the last year. If you ever want to
TUP.
read about the price of goods at the grocery store, Chipotle's report actually would tell you a lot. It's sort of like reading the CPI figures, honestly, at this point, which I actually think is really important because it shows the fact that inflation is still weighing on consumers, not still weighing on names like Chipotle with sizable, obviously, food expense exposure. So they did report actually better than expectations as far as their second quarter went, but did guide for some slightly weaker the current quarter figures, since that inflation did hit some of their most popular menu items.
Nice, Kevin.
Food, beverage, and packaging costs were lower in the second quarter than a year ago, benefiting from their price increases they took a year ago and these lower avocado prices. The word avocado was listed like 15 times in their earnings call. I thought that was so funny. But this was partially offset by the inflation they saw across several food categories, including beef, tortillas, dairy, salsa, beans, and rice per Chipotle. Now, CEO Brian Nichols did say the company plans to focus on growth in the number of transactions happening at their stores. Executives did also tease a new menu item after the Chicken Al Pastor did have a really successful run that is expected to end in late August. Now, the Chicken Al Pastor helped them navigate inflation. I thought this was so interesting because it shifted people away from more expensive, the higher food cost steaks. So the company experienced this low-grade inflation per nickel. Now, for the third quarter, they do think there's going to be this bump up in food costs attributable to the same kind of low-grade inflation. The company does expect to continue now into the current quarter, but without the offset from cheaper avocados as well as the Al-Pastor item. That just goes to show the actual material impact this item had on Chipotle in the prior quarter. This was one of these TikTok crazes that actually they mentioned on their previous earnings call, saying it gave them a material benefit. So trends is something Chipotle is very much tracking, and he did, Brian Nichols did allude to that they're sort of seeing what works for customers, what doesn't work for customers.
GNI.
They're trying to find the most efficient way to then serve their customers while also remaining an affordable option, which I know that their prices have gone up. I recently went to Chipotle, and it's always amazing to me that it seems like it's been like $12 for as long as I can remember. So that, as a customer, I appreciate, but obviously today, not enough to give the street some excitement. Shares are down over 9%.
She must get guac, chips, drink, and a tip.
Actually.
Jenny, one of the ways that Chipotle has been able to basically, contend those higher costs is through the menu price increases, like you mentioned. I mean, they did 10% 2 quarters ago. They did 5.5% for this most recent quarter. You got to think that there would be some kind of elasticity of demand, meaning, some price point where the consumer may step back a little bit in terms of their demand on their products. But did they indicate anything in terms of what they're going to do with their pricing? And, God forbid they actually lower prices for a quarter. Is that going to happen?
No signs of them lowering their prices. And I think really, Nathan, what we're seeing is every single restaurant right now is getting more expensive. So they are still somewhat in the mid echelon of expense as far as us as consumers go. They're not super high end. Sweet Green is one where I cannot walk out of that place for less than like $20. I don't even know how it happens. Chipotle is still somewhat mid-tier. So even though they're raising their prices, everywhere is raising their prices, right? So they're just sort of then following in line with the rest of the restaurant industry. Something they do really well, though, is they operate right now that they're focusing on automation. They're focusing on some of these ghost kitchen concepts. So that's a way I could see them
well, at least made money.
Operating with a less labor-intensive restaurant space. That's still something they're sort of working out. But they did say that right now, to sort of mitigate the ongoing food inflation, the prices remain in somewhat of an influx. So I think
18, 25 calls. Nice. Yeah, I
I
had 40 calls for October. They're just too far out of the money.
Is again another weak spot.
Too much time.
But Chipotle, I will say, they're the
I'm gonna reload with
some
some September,
space.
I think
So
35s.
I tend to trust Brian Niccol in his direction. He's done such a phenomenal job leading that company.
A cautionary tale for all restaurant groups: don't mess with people's avocado toast, Jenny.
No, no kidding.
All right, Jenny, thanks for coming out. Always have a great day. Nathan, I want to stay with you for one more minute on Chipotle. You see a pretty big gap.
There it is, 37.50 Tupperware hit.
Chipotle jumped out.
If I was in it, I would probably be scaling out some here.
Now, you're an expert, much better than me on technical analysis. What should our viewers know about the fact that it's in the
Scaling out some more if it hits this gap build, 4-1.
Is about 1,806.
Day-wise, though, it's not looking like it's rejecting yet. It just looks like another bull flag.
Significantly lower than here, Nathan.
Yeah, it certainly is. And, there is a saying in technical analysis that all gaps eventually get filled. And so, near term here, yeah, I think you got to be a little bit concerned technically.
The SPY's been kind of melting up here. I'm still waiting for
tell as well. And if you look at where it's trading in terms
confirmation,
of
it's just
today,
been
it's been, basically 1900
still kind of controlled
ish, and we're
price
trading
action
towards the lower end of that, which might suggest, technically speaking, that maybe that gap is going to be filled to the downside. So I think from a trading perspective, if you're looking at a drop like this, you may be a little bit more patient if you believe that gap has the potential to be filled here in the coming weeks.
Yeah, I love to trade these names the second day. I like to let this flush out. You may get some, some people adjusting risk tomorrow. I think tomorrow will be a really interesting day to watch the price activity in Chipotle. But before we take our first break, Nathan, let's talk about
premiums. Never
get payrolls.
Never went that crazy, I thought.
Tomorrow we get a massive PCE number, if you ask me. I think that year-over-year PCE, that
at least not the ones I was holding.
Stubborn around 4.6%. Some of the consensus is for it to
I'll be looking at what, September? I think I'll be looking at these 35s.
Would really like if that
yeah, the IV's still under 50% on these.
That services X housing number, if that were
September
to start
35s.
to come down, Nathan, your thoughts on the upcoming?
Yeah, the IV's still really low. Number. I mean, it's maybe come up some, but it's still really low.
I think it is really important.
Teledoc used to trade like crazy. Used to see triple-digit IV.
Of course, we know that the Fed is looking at the PCE.
Won a lot of time, because I think this would be a big sustained move.
side of it. So, if it comes in
I mean,
below
you could
estimates,
see
I think
$100
that's
back
great,
on this
but
thing.
Kevin, it's like how much juice can we squeeze out of the disinflationary story? And so I do think it's important
Maybe we're getting
because
some
if
leaps
it does
too.
remain sticky, I think you've mentioned before that it's been hanging around that 4.5 to 4.7% range here for several months. The Fed wants to see it come down. It is going to tie
I think
into
we were seeing
their
some insider buying on it
policy
yesterday.
going forward, and that potentially could be
Today
one of the
too,
risks.
maybe it must
What
have
if
been.
the Fed turns out to be a little bit more aggressive than the market anticipates? They think it's one and done. You said they might have one more. I think the market would be okay with just one more, but there's always the potential of, hey, what if it does remain more sticky than anticipated? When you see how strong the consumer is, how strong the economy is, that's going to tie into inflation.
Yeah, Nathan, Jerome Powell made a couple of comments yesterday, like, we're going to look at the totality of the data was one of his phrases that he talked about. And he mentioned consumer confidence by name. He mentioned the favorable CPI data by name. So he's looking at the data and he's judging each one of those. And right now, with the data we got today from jobless claims, durable goods, GDP, all stronger than expected. The totality of that data, Nathan, is showing a little bit stronger economy, I think, that Jerome Powell wants. And the last thing I'm going to ask you to comment on, Jerome Powell made a statement yesterday that was very sobering. He said unemployment at 3.6% is the exact same place it was when we started raising rates a year ago, March. That is incredible that you've been able to take interest rates from 0 to 5.5%, 5.25%, 5.5%, and unemployment is flat at 3.6%. Nathan, your thoughts?
Yeah, that's been incredibly resilient. Yeah, to see those jobless claims come in this morning, the lowest since February. Number. Yeah, it certainly is, and so it does speak to the strength of this economy. And I think we've mentioned it before, but coming out of the pandemic with the Fed dropping rates to 0%, the $5 trillion in fiscal stimulus, the new high in stocks, the new high in housing, that speaks to the wealth effect. That speaks to the strength of the consumer. And that also does tie into inflation, like you said, but there doesn't seem to be any cracks. Typically with the Fed doing what it's doing and inflation having ramped up like it did,
there's an engulfing candle on top. That looks like there's going to be a resistance for now.
In the labor market, of course, that's always a question mark going forward.
See if we get a pullback to VWAP.
Looks really resilient.
Might get another push end of day. We'll see.
Jobs reports, 2 CPI reports, and a bunch of activity data that comes out before that next meeting, not in August, but in mid to late September. I think it's the 19th and 20th of September is the next Fed meeting. So this is going to get interesting. It might be a little better summer than we all thought, but you've got a VIX currently sitting now significantly below 13, Nathan. This is starting to hurt in the premium department. All right, let's take our first break.
I would say real
Go
quick,
ahead.
Kevin,
Yes, Nathan.
let's not forget we're going into August, September, which seasonality is not on our side. If you're bullish,
that's right.
Just take that into consideration. And like I said, as we exit earnings here, what's going to be that catalyst to get us to the next leg higher? So you could be a little bit cautious here. I don't think that's a bad thing.
Yeah, you mentioned a week ago that the PE ratios on the S&P were high around 19. They're higher now, Nathan.
Yes,
as
they
you
are.
know. Yeah. So the cautionary tale continues. All right, let's take our first break of the show. Come back with our first trade.
I need to get back to all-time highs.
An energy company coming out with earnings
or they can dump it.
ExxonMobil. Take a quick 2-minute break. Come back with more Fast Market. See you then, everybody.
So I'm looking for kind of a break of this level, which it's starting to. Yeah, there we go. That's one to see. They're still kind of fighting it. Yeah, TUP's going to be coming down, I think, here some more. The barbecue down 9.8, 28 cents. BBBYQ just hanging around VWAP now. GME back up green, 1%. That is neat. Be a false break there on the SPY. Nag 2.5. Okay. Wake back up. France is done. You're going in heavy on Google? Yeah, Google didn't really get the huge push, right? Like the other ones? Yeah. I like it for a trade. I think it'll definitely come lower than this after we hit some all-time highs. But it could maybe hit all-time highs before then as well. 147 or so. 50. Thought we're done with that one? I don't know. I don't know, Kevin. I don't know why we're still watching it. I mean, there's still a possibility for shareholders to have value. There's a full buyout, carve out. The court hearings, dockets, there are some interesting things about it. Who's on the board is interesting.
of energy companies. They've got upstream oil and gas production facilities. They've got midstream in pipelines. They've got downstream in refining and chemicals. They're actually making investments into more sustainable energy. So they're really covering every base here. But that said, if you look at a chart, and I'll throw up a chart, guys, if you can follow me to the Thinkorswim platform here, I'll put up a chart that compares ExxonMobil to the price of crude. And as you can see there with the price of crude, it is correlated. ExxonMobil weakens when the price of crude oil weakens, and the last week or so, when crude oil has run to $80, look at ExxonMobil stock following right along. So we can talk about its balance sheet and its earnings and its dividend, but all these things come right back to the price of oil, Nathan. The trade I have for ExxonMobil is kind of a lesson and kind of a look at how you can play a calendar spread. Now, bear with me, Nathan, and join in on this discussion.
In the SPY daily calls
If we
for
were
the
to
8.
do the 1 week calendar spread, looking at the expected move, let's say the August 4th, July 28th, 108 calendar spread. Costs you about 45 cents. And it's got, like I said, 1 day till tomorrow's expiration and then 1 more week. But how about this? That's trading about 45 cents right now on the Thinkorswim platform. That's the midpoint of that trade. If you were to go out 2 weeks and make that trade, is it more efficient to do? And the answer is maybe. It's 45 cents, which if you did that 2 weeks, that's 90. So the 2 week spread, Nathan, is 84 cents. Same strikes, 108.
GME's popping up a bit there,
11th
1.6%.
versus July 28th. And that's trading 86 cents, which if you added another week, it's maybe a better
BBBYQ also, little pop off VWAP.
than 45
Oh,
cents for 1 week. Now,
literally hit red or
net
resistance.
outlays, you're more.
Back down to VWAP.
You're spending more on the 2 week trade, but you're spending less per week than you are in the 1 week trade. Your thoughts on duration and a calendar spread, Nathan?
Yeah, it is a really good discussion, and yet you're right. You know, we know that in that last week that the one that you're selling, that's, you know, we are going into an earnings event. You are selling that one for tomorrow. But if you do add an extra week, that does give you the potential to chip into that debit a little bit more. But I think the important thing here is, you know, you're selecting that 108 strike is that there is a bit of a bullish bias. I like how you brought up the price of oil with Exxon. What I noticed on that chart was basically over the last 2 months is that oil has been lifting off up towards that 80 mark, but Exxon on a relative basis hasn't done it as much. So that might be a little bullish indicator in the sense that maybe that.
Now we're looking for retest the high today.
Here, but
SPY.
you know, when you extend duration on a calendar like this, Kevin, I think the thing that you would be concerned about is that what is your and there's always a trade-off. I think it's great. You said the answer is maybe. That's pretty much the answer to every question about when we bring up these types of option strategies, because there's always a trade-off, right? Whenever you extend duration, now you have to be more accurate about that long strike, that price level. What's the risk? Well, the longer you extend that duration, then maybe that gives more room for the stock to deviate from that strike price, right? So that's certainly one of the trade-offs there. So it depends on, you know, get a sense of, you know, where do you think the stock is going to be by your long strike? Work from there and then begin to ask those questions. I like how you compare other expirations and ask if the incremental debit is going to provide more of a benefit based on your forecast.
Hey, Dante.
So that's really the way to play it. I think no matter what strategy you're initiating here, it's always wise to take a look
interesting
at
for
the
SoFi
various
for Monday
strikes for comparison and contrast, and then add in.
What do you mean on Monday? They have earnings on Monday?
There to get a sense of that contrast as well.
Oh.
I think that's just a good way to
I don't know.
approach any option strategy. But I like the
I don't know
way
where
set
SoFi is
this
going to go
one
for their
up
earnings.
here, Kevin, in the sense that you're targeting that 108. I do notice the 200 SMA
Maybe someone else does.
is around
That's an idea.
that 108 level. And so that does kind of, you're not putting yourself above that in the sense that you're saying, okay, well, I'm going to get in the face of that moving indicator. You said it just right around it.
Yeah, and the last thing to think about when you think about a 1 week spread versus a 2 is that your Greek
I'm gonna take some profits on
increase,
calls.
right? Because that long option that you have is further away from expiration.
Probably right
it
up here somewhere.
More sensitive to a move in implied volatility.
Try and make it
by
free,
the
but
Vega component. And if you look
hard when they're only
right
up
now,
20%
Vega
or so.
Component on the 2 week spread is about a 5 Vega. If you put the 1 week spread back up, there it is. It's about a 3 Vega. So you see the differences. The theta is very similar. It's around a theoretical dollar difference between the two, but it's make sure you understand and know the Greeks. You're adding Vega sensitivity to implied volatility when you move that date further out. But Nathan, great discussion as always. Great lesson on how to use the calendar spread. Let's take our second break of the day. Come back with Andy Swan and Like Folio. They're going to talk
Stop looking at me, Swan.
that is Roku. Does digital ad spend that we saw in Meta platforms filter in to Roku, or are they one of the losers like Snap? Take a quick break. Come back with more Fast Market in a few minutes. See you then, everybody.
Yeah, earnings are kind of just a roll of dice. Play it both ways if you think it's going to be volatile. Huge canvas coming into the year. Alright, Laura, there you go. Yeah, we were looking at Sundial the other day. Was that because of you? Oh, it's up 4%. I drew that line. I wanted to see it break that first. Oh, BBIG broke out. New high there. Up, handle. Handle took a long time. Go for it, BBIG. Can do it. New low of the day on barbecue. Flushing, 28 cents, 27.80. Down 11%. GME is rallying there, 2.3%. That is neat. Still down on those calls. But don't buy in the morning, kids.
Nathan Peterson. Now it's time for our cash tag segment. For that, I'd like
Getting
to
some
bring
volume there on
in
GME
the
also.
co-founder
2.5.
of LikeFolio.com,
We might get a quick
Mr.
move back
Andy
up.
Swan. Andy, this
Premiums
is a
haven't really started
perfect
moving yet.
example of what we're going to do a lot during this earnings season, and that is look at the 1 year chart that actually doesn't look bad in Roku, and you look at the 3 year chart that really tells a different story. This is a company
Thanks,
that's
moving
gotta
up.
have digital ad spend coming their way, Andy. Meta platforms have
Buys
it.
moving up.
Snap clearly
Zoom is up
didn't.
4.
Where does Roku land on that scale?
Market's waking up.
I'm gonna guess Roku lands in the middle of those two. You know, just looking at like folio data perspective.
BBIG, some more consolidation.
Anything that tells us Roku is winning consumers over.
2.6 on GME.
If you look at consumer purchasing
With some volume, 2.8.
talk about,
Oh snap!
Roku TV and selling
That's
the Roku device,
that's pretty
all
quick
that
for
kind of
GME
thing.
as of late.
Really just kind of
3%.
a strong company with strong growth, but nothing.
It's looking a little squeezy there.
We saw a few years ago, and then
What's cost
on
doing?
top of that, the one thing that really
Nothing.
concerns me the most about Roku
Nothing
here
on
is
AMC.
when I compare it to some other
Need some
peers,
real
which is hard to
volatility
do
to get it
because
going.
there's devices, there's content.
It's interesting.
Roku's in a lot of different
BBBYQ might be
avenues,
reversing.
including advertising. But just compared to some other peers, Roku kind of bottom of the pack.
All right, GME, let's do it.
The content side of things, barely beating out Netflix and below some others. So again, not bad, just nothing that I'm really getting very excited about. And when a stock
Closing some of these spy calls
is over the past year, you really want to be very excited before an earnings event like this. And for me, it's just not there at this point.
Hey, Andy, I noticed on their last earnings report, Roku said that their streaming hours per active
closing
user
half here.
3.9 hours. That doesn't sound like an unhappy consumer in my mind. Accounts were also up 17% year over year as well, active accounts. And then, like you're mentioning with that 66%, is that common as you look at your data more historically? Is it common to see Netflix and Roku down towards the bottom of the pack, or is this kind of a recent transition as the likes of Fubo? I mean, that surprised me to be at the top there. Is there something tying into the trend there, or is that just historically where Roku is kind of hung out?
No, they just both kind of fallen off down to that level. I think they've both become a little bit old news. I think some of that initial magic that you might have experienced when you first, when Roku first came out, when Netflix was first introducing its own, streaming independent content, those kind of blew people away.
Close the futures too.
Those consumer
I might reload, but give it some time.
Explode. So where they're at now is not bad at all.
I like it. I think
kind of what you would expect
it
from
wants
a
to make
more
that full
mature
cup.
company in a more mature space. And so that's what I'm saying. I think Roku is that. It's a more mature company now in a more mature space. And so what is the next catalyst that gets them really to those, the stock to where it was a couple of years ago? It's got a long way to go. It's had a great year this year, but it's got a really long way to go to get back to those old highs.
Andy, they've had
Would you buy more of Maui?
3 in a row earnings beats, although losing less money is an earnings beat. But how about this deal with Shopify, where they're allowing those third-party Shopify customers to actually advertise on their streaming service? Is that going to help them at all? Is that going to give them any kind of bump? Or are they looking for the bigger fish digital ad spend?
Yeah, I think the answer is both. I think it's a great move by Roku to open this up to this partnership with Shopify. I think there's probably other partners out there that could do really well. I don't see that playing a big role in this quarter's results, but I think if the company's smart, it'll play a big role in what they talk about in terms of the future, because they've got
another doc just dropped
out there beyond just their own branded TVs. They need that next thing. And so far, I don't see anything that tells me
motion to assume filed by creditor.
Certainly this Shopify partnership could be that. I think it's a really, really smart move by the company.
Andy Swan, co-founder of LikeFolio.com. Thanks for coming on. Thanks for giving us the LikeFolio data that we see every day and love.
I don't know, there were a bunch that dropped this morning.
Thank you.
The one just come out? Is that what this little sell-off is for?
This thing, I get it. I saw the trade that you sent in. I get it. You want to be able to sleep at night knowing that it's probably going to move a bit. Tell us about your trade that you're thinking about here.
Yeah, sure, Kevin. And, I'll say regarding that Shopify partnership that they have, I think we're just one step closer to imagine, you're watching a movie and then you click on James Bond shirt because you want to purchase it. And then you pause the streaming service, then you go off and you purchase. Maybe you get that conversion. Maybe it's treated as, more of internet ads, and maybe you don't, click on those as much, but we'll have to see. I think that's kind of interesting. They said it's the first of its kind to be developing that type of a partnership. But yeah, you look at the chart of Roku. This guy moves post earnings. That's really the bottom line. I don't know how they're going to perform. They're not profitable. They're investing a lot in advertising, and they're doing some layoffs. They're trying to manage costs there, and apparently they're spending now to basically fuel future growth. But I just don't have a sense of whether the stock is going to move higher or lower. So if you have that type of a view that you don't really know directionally or don't have a sense of whether you're bullish or bearish on the name, but you might have an expectation that it is going to move, well, first you can go to the options market and get a sense of what the implied move there. It's $8. So Yeah, Kevin, I was just saying, all right, if you have a view
3% on
this
GME.
stock is going to move, its history is going to rhyme here.
Oh, barbecue's
put on
flushing.
like an iron condor. And I selected the one that expires tomorrow using the strikes of 68 and 64 and using the upper strikes.
Are there more dockets coming out?
Of 74 and 78. So
25,000. What's that you're saying?
You know, to take into consideration that implied move that if we were to get that move one way or the other, that would set you in that max profit zone.
Oh,
so
it's getting close to this trend line.
What happen here is a muted response to the earnings report.
Yeah, exactly. So what Nathan's doing here, he bought the 74.
Unless it's something fundamental, it might bounce here.
He bought the 68.64 put vertical. Remember, there's an expected move of currently now about $7.40 in either direction. So remember that. That could be almost $15, and Nathan's outside strikes are much tighter than that. So the trade-off, and there always are trade-offs in option trading, you're a little tighter, so you're paying a little more, but the odds that you may come in, you know, that one of these verticals may be in the money is higher. You're paying theta instead of collecting it, but this is one where you get to lay your head on the pillow at night, Nathan, and say, I hope it moves. I don't care which direction, just move.
Right. Yeah, that's the benefit of being able to use options, that you can play for a breakout. That's essentially what you're doing here. You don't care. You want a surprise here. You don't want it can be a negative surprise or a
right on the line.
Surprise. And then also you can take a look at the chart there.
Can't see it on the 5 minute.
How a thesis like this
on the 30,
developed
the 10,
notice, hey,
the hour.
Stocks have some kind of a personality, a behavior, and at least over the past couple of years or so, Roku is one of those stocks that appears like it likes to jump post-earnings.
If this climate in digital ad spend is more optimistic, like some of the firms are reporting, Roku could be a big winner during that. Do we know? Of course we don't.
It works for anyone.
On this trade,
I guess Costco.
Is the debit that you spend on that trade. That is the risk. It maxes out if it goes to one of the far strikes, like $78 on the upside or $64 on the downside. So about a $14 range in between, in line with the expected move. But if you see,
super volatile, lots of volume.
Platforms had a move outside their expected
this could
move
be good or bad.
A lot of
so far it's been bad.
We're going to watch this, but in terms of Roku, a stock that has a history of moving doesn't mean it will. You got to be careful for things like assignment on some of these options. Remember, the risk is the debit paid in this option on these spreads. The total package of right now about $2.65. All right, let's take our last break of the show. I'm back with our
I'm assuming something's bad on whatever dropped.
The show is the beleaguered semiconductor company Intel. We'll come back with a Ben Lichtenstein up.
Lichtenstein. See if it bounces here again. The volume was big. Where are all you dip buyers at? 26 cents. Not even Friday yet. Another docket dropped, I think. Cameron, Maya was saying. Said 25,000. I don't know what that means. 1557. Yeah, just scroll up. Yeah, maybe. I mean, if it breaks here, there's you know, it's changed the whole trajectory of OTC. Hour ago? Oh, so this is just how it goes. Marantz does not work for RC. Yeah, there's the other pumper. Got Lauren Ronald scouring the live stream chats. Alright, I don't like that. It's ugly. That's through that level. It'll probably bounce. But yeah, that's not the support it. I want it to break. Judge accepts debtor's dip request to shorten time period. That would, I mean, that doesn't seem bad. Must serve all docs by July 31st. Cameron, shut up. Liechtenstein.
Well, yeah, I mean, especially when you have the 2-year inching its way back up to 5%, that might be part of why we're seeing strength in the U.S. dollar, but we're also getting weakness in some of the other foreign currencies, Kevin, that drive the U.S. dollar higher, like the euro, the British pound, for example. Some of the foreign currencies, especially the euro weakness after comments from Christine Lagarde, the ECB much.
Yeah, we're already hearing about that earlier, Guts.
But I think that some of the pushback in terms of economic conditions there and concerns related to is what's weighing on the currency. Lagarde talked about the near-term outlook and how it's deteriorated, how while labor markets remain robust, domestic price pressures are becoming important drivers of inflation. She talked about how economic and inflation outlook remains highly uncertain.
I don't even know what you're saying, Mel.
Prices, potential upside risk
happens every week,
and wage increases, which are playing a role in driving.
I mean, when it's coming, it's dropping with dockets dropping, that just showing more signs of liquidation. They're somewhat merited.
More of an optimistic tone tied to the U.S. dollar. Again, with the data, the Fed Chair Jerome Powell comments and all, but a stark contrast between what we're seeing in the U.S. dollar and the euro currency as of recent.
Exactly right, Ben Liechtenstein. Thanks for coming on as always.
And if it has happened before,
he's the host of the Future Show, 8 o'clock Eastern.
There's always time when it doesn't come back up.
All right,
it could always happen too.
Moving over from Ben Liechtenstein, let's go to Salt Lake City, Utah, and bring in Mr. George Tillis.
Yeah, I scaled back in a little bit just because the TA, but then of course I get slapped with dockets
semiconductor named George
immediately the day after.
They've got about $50 billion.
We're not worth trying to trade this thing with TA. Not this late in the game.
At this semiconductor behemoth.
Well, it's a good question, Kevin. I mean, it's starting to look constructive if you look at
the dockets. You're saying from here?
Year to date, but Intel is still down significantly.
The consolidating up here.
$66 back in.
I don't know. Someone was in here saying something dropped.
It's just been down since, but overall, you know, I think it comes down to what Intel is doing.
Just more people probably reacting to the news.
Of companies like AMD, which of course we know is making a lot of headways into the discrete graphics chips space, which is utilized for graphics and 3D acceleration and artificial intelligence, competing second to NVIDIA. Now, one of the challenges for Intel
GME
is
red candle.
Very
I like this volume volatility on GME. I want to get some more calls.
And that is, again, a good sign or a good thing when, of course, there's high PC demand and server demand, but not necessarily when we're seeing a lull in the cycle. Now, looking at the earnings per share for Intel, they're expected to match essentially what they produced last quarter, which was a loss of 4 cents per share. Now, compare that to 29 cents last year. That's a significant decline, but there's a reason for that, which I'll explain in a second. And if you look at the sales, also expected to be down about 21%. coming in around 12.03 billion compared to 15.32 billion last year. Now, much of that decline might be attributed to the Mobileye divestiture or spinoff, in which Intel generated about $26 billion. Once they did spin that off, that was back in October of 2022, and that has become sort of a cash cow for Intel. You mentioned the debt, which is about 50 billion. They do have about 27 billion in cash, which has helped again stabilize the cash burn that the company's gone through because of the fact that they haven't been making money.
I want to take the long here. I'm a little nervous though.
Discount CPU chips.
Didn't really build any liquidity.
They're spending quite a bit of money to improve, of course, field programmable chips, which is used in industrial automation, factory utilization. While at the same time, they're trying to, of course, play catch up in that field programmable space, but also in artificial intelligence to start matching AMD. Now, with the expectations of a loss this quarter, I went and looked at the forward estimates for 2023.
BBBYQ does not want to break out yet. Nice bull flag though now. Cup and handle turned into just a flag.
Marketable improvement from this quarter. Well, at the same time, in 2024, they're expected to earn about $1.74, which really puts its 2024 earnings multiple at around 20 times versus 80 times 2023 earnings. So I think this will be an interesting quarter. We're starting to see a little bit of a firm up in the NAND and flash memory chip manufacturers and hard disk drive manufacturers like Seagate and Western Digital. And Intel typically trades alongside those names because they are very
trying to average into these GME calls.
In the CPU markets and the PC markets as well.
Average up.
Hey, George,
the trend has been confirmed.
That could potentially breathe life into Intel would be that AI category, right? That's a lot of the buzz around that. And I looked on their website. It looks like they already have some kind of an AI offering, and AMD is looking to launch theirs here in Q3. But do we have a sense of where they kind of stack up? Are they behind in the game? Are they going for, I think AMD's chip is supposed to be 80% as fast as NVIDIA's. Are they anywhere in that conversation? Or do you know
everyone
that
say NVIDIA
could be some kind of a catalyst for the company?
Like I'm taking crazy pills.
Yeah, that's a potential catalyst for the company, but I suggest they've been sort of way off. I mean, obviously they've got too
bunch
much
of platforms, all their share. How can you see your shares get borrowed?
Like I said, some headways in industrial automation and field programmable chips because AMD bought Xilinx, which again created another problem for Intel. But they've had to expend quite a bit of money in, of course,
there's a pullback on SPY is what we needed.
Chip technologies for artificial intelligence. So I think analysts will be pinpointing, obviously, what Intel is doing in artificial intelligence, where they feel they are relative to the
I don't know who you're asking, Pulte,
NVIDIA and AMD,
but I'm assuming you're saying that because of GME, my history.
I
do, but it's different on OTC. I think we're actually seeing price discovery on OTC. I think retail's orders hit lit exchanges and actually affect the price.
They are generating, with their ownership of Mobileye, they still own about 30% of that company, quite a bit of cash from that particular divestiture. So, I'm mixed on this. Looking at the trend year to date, it looks very telling and constructive, but at the same time, you have to look at the growth trajectory for Intel, and on a forward basis, they are still expecting sales to be down 8%.
Other platforms report shares about like our brow desk.
Same year.
They're reporting what? They have a bunch of shares?
2022.
A bunch of platforms, so all their shares get borrowed. Oh. Yeah, again, Cameron, I
reported some revenue declines, but some good news.
Yeah, iBrow hasn't shown shares since 10 a.m.
They think that PC sales are starting to recover, so
I can't, yeah.
Some good news.
Oh, I got some more GME calls.
But this cash burn is a problem, George.
Yeah, no, I'm serious.
It's a problem going forward. George Tillis, thank you for coming on.
I think it is. I think it's on OTC.
All right, guys. Jay, George. All right, Nathan, let's get to our final trade of the show here. We've got
I averaged into those GME calls I got. Might get a further pullback. Maybe we'll get some more.
And if you
liking the volume on this breakout.
The 1-year, 3-year chart tells a different story, as you know. The 1-year chart, it's gone from about $24 to $34, but this stock is still 50% down from its all-time high of around $68, or the 3-year high, let's put it that way. So in this case, I have two trades. They can be done together as a more complex trade, but as you know, Nathan, a complex trade a lot of times is just two fundamental trades.
Is that a bullish statement you're saying, Son of Pulte? Market cap's 23 million, and old dead's higher than that.
It's about $2.30.
If the company survives, if someone wants to take on everything else.
About $2 and sold the 36 38 call vertical. This is expiring tomorrow. So if it doesn't get to 36.46, this trade
High interest rate environment, like borrowing money is expensive right now. I don't know. Market's in a recession.
Then, if you wanted to do something a little more, that's passively bearish, as you know, Nathan.
Cash is king right now. Even though we have high inflation.
Where I went out about 3 weeks. I bought the
There's
August 18th
hedge funds and wealth managers that they all have, most of them have big cash positions and have been increasing. And now you're just starting to hear some of them. We even heard it today where they're saying, "Oh, I was wrong. It's not a bear market." They're starting to put stuff back in. That's how you know. I mean, I think they could, but I don't think it's maybe for a couple months. The bears just didn't hold out long enough, so they're going to get slapped.
Combines 2 fundamental trades to add in to 1 complex trade. Nathan, your thoughts?
Right, so you're basically, bearish on both of these strategies in a sense. You could say that you're neutral. If you get a muted response, I mean, that could work for that, credit that you have above there, and you do have a little more time with that diagonal there. I think, on the one hand, with Intel like this, I can see why you might have something like a bearish positioning here in this sense.
No, Kevin, I'm looking for testing at a high up here, 27. I got next month, monthlies. Hopefully it makes it back up here in the next couple of weeks.
We saw some of that with Microsoft.
Could do it in a day, though, knowing GME. But we haven't seen a move like that in years on GME, or at least a year. So it could be a slower grind.
Talked about the death cross on ExxonMobil. The technicals do look like they are improving. They've gone from breaking out of this
but you can see how high beta it is right now.
Phase from 25 to
really
30,
interesting.
and they've been lifting above that 200
and I think SPY is in a squeezy
state
state also. So
as you know, when we go into
yeah,
earnings
it
here,
supports
really
it.
Depend on guidance and growth, and we saw what happened with Taiwan, like you mentioned.
Before holding above BY.
So this would be, something that you would establish here if you're cautious heading into Intel's report tonight.
Yeah, the risk on the diagonal is the debit paid. The risk on the vertical spread
Very
is the difference between the credit.
Interested that it bounced right on that level.
Just under $300.
That's the level it has to hold.
Risk on both of these trades. That's it for our show today. Thank you so much for Nathan Peterson for coming on, spending an hour with me, for all of us here.
2 weeks out. Yeah, I'd like to, I mean, OG GME, when it was broken, yeah, a week out or 2 weeks. The fixed, big grown-up GME, slow-moving, value, blue chip. I get more time now. I get more time anyways now, just to have higher probability of profit. Yeah, that's some high beta action there. High beta. 4 minutes to 1 o'clock. Thank you guys for your support today. Joining volatility in all ways. 27 likes. Thank you for your thumbs up. I appreciate it. Last week bounce off 25. through 21. Oh, you're talking about this one on Friday when that docket dropped? Yeah, that was different though. That was a dump and rip. This has been a melt. Totally different price action. There's a big gap down from that docket dropping, and then a little push, and then a rip out of it. About on Friday. This didn't happen with pre-market at all, and we didn't have any huge buying pressure out of it. I don't hold those the same, but yeah, I mean, you're right. It did hit there briefly. This was also on bad news, but people perceived it as good. So But yeah, I mean, look how fast this happened in the amount of volume. Today's is melting down and increasing. We're really not seeing support until now here, which coincidentally is also this trend line. So maybe, but it just doesn't look the same at all. Like to keep you guessing, sure, certainly do. Polish there for short names called Polish. Yep. Looking for another long entry here. Yeah, I like it. Still holding half my calls. Look to exit maybe high day. Might even get another GME call here. TUP holding up above VWAP. It's 1 o'clock. Still plenty of time for GME to hit 25 bucks. As far as here, if someone does come in, it's going to be just probably a very last ditch effort. And so we're most likely not going to hear about it. Once you've heard about it, it's, yeah.
about 1% into middle of the day. They're also set for some significant growth due to some policy incentives in the U.S.
Well, AC, if there's no catalyst though,
in the EU, which has
there's a reason why there's a huge short interest on it. It's because it's going bankrupt, or it's bankrupt and it's being liquidated. So I mean,
and they're increasing interest.
Gotta have some catalyst of it not going or getting out of bankruptcy.
Despite those potential risks, though, we are seeing some pretty healthy levels of growth expected for this upcoming report. Earnings pegged at $127 a share. That would be up 19% on a year-over-year basis. On revenue of around $726 million, that would also signify growth of 37%. Over the past 2 years, Enphase has beaten earnings estimates 100% of the time, and also beaten revenue estimates 100% of the time. So that's not too bad of a track record. We also have seen some strong top-line growth across their product portfolio,
All right,
which
let's
is
finish this
expected
cup.
to contribute to this current quarter. So this name is down 36% on the year into this report. This name needs some love, and it needs some enthusiasm here surrounding this quarterly update, Alex, to then excite investors.
Yeah, and you can see that on that chart. There's a pretty massive vertical move that was about exactly 1 quarter ago, and you guessed it, it was around earnings. So in spite of the fact that 100% of the earnings have been beats, hasn't always been enough to move the stock higher. And so when you're looking at Enphase,
GME back to
in this
VWAP.
particular case, just clearing the bar hasn't
Like the
been
inverse head and
enough.
shoulders, like the breakout of the level.
25% of its value in a very short period after the last earnings announcement. So bear that in mind when looking at this one. Next one on the list,
Let
though,
Discord know.
Jenny, is a name that has had quite a roller coaster ride in its own right, and that's Roku.
Right, absolutely. So Roku is, I'd say, one of the biggest companies that's reporting today after the closing bell. Roku alongside like Intel are the two mega names reporting. Roku has been all over the place this year, but still, I'd say a relatively strong performer, up 74%, now up 85% off its 52-week low. They've delivered very well on the earnings stage so far this year as well. They posted better than expected results in their first quarter, even though the stock rose a mere 1% on the news, but the shares did surge 11% following the well-received fourth quarter figures back in mid-February. Other positive developments could really signify a further rebound in the shares. Ad revenue is something that's extremely important to Roku, and we do know from Meta as well as Alphabet that
Fleshy
ad
Spy
revenue has been rebounding.
What the heck?
But we also know from looking at Snap's reaction that it's not necessarily a rising tide lifting all boats. Roku, though, itself has set the bar pretty low heading into some of these figures.
That?
It predicted some more red ink for the quarter, targeting
I got my
a
GME call.
$175 million. The $770 million it was modeling for revenue would translate into
Weird
less
flush
than
to VWAP
1%
there.
year-over-year growth.
Just like one of
They
those
also
slow,
forecast
choppy
their gross
days, not
profit
much movement, and
adjusted
then
EBITDA would deteriorate sequentially.
stuff just looks
despite
crazy.
Their recent commitment to prioritizing projects that would potentially deliver the highest returns on overall investments. So the silver lining is that the outlook has been so lackluster that we could perhaps see some further enthusiasm once we actually get some clarity on how bad things were or how positive things were.
You know, I've been pretty tough on this company at times in the past. It basically is it's a software, it's a user interface that essentially could be disrupted and replaced by a folder aggregating your apps on your smartphone or video device that you're utilizing, Roku. But this has been a tough company to bet against
I'm getting these calls.
in the long run because it's been such a forward-thinking leadership team. They initially came out with a product that was sort of a stopgap.
Out of the spy calls. Still on GME.
School TV and the
Just
smart
intraday.
TV. Well, those kind of stopgap products, the traditional Roku device, is somewhat obsolete at this point. So they shifted to more of an ad-based and ad-driven software product, and it's been hyper successful in that endeavor. But it's becoming increasingly more and more competitive to get those dollars and cents for those ad dollars.
Wow.
Space. In the case of Roku, we have seen over time the amount of users into the platform start to shrink in terms of the growth behind that, but they've been more effective at monetizing the users that they do have. So I see that as probably the continued trend. We're probably going to see slower growth of people joining Roku, but Jenny, we may see
Spy just turned on. Got really volatile right there. Not sure what happened.
So some positive things that they're ever going to be consistently profitable over time. But when you're not profitable,
Hey, Psych, you up top, man?
tells us all the time it's all about growth. So the fact that the growth has started to slow is a little bit concerning.
Absolutely, because the path to profitability should be something they're harping on so consistently on the earnings calls. Again, we haven't gotten the earnings yet, so
is it an algo play or is it short interest? Because
Roku still, but our next name today is T-Mobile. We
AC.
already heard from Verizon earlier this week. It was not so positive. We saw shares sell off pretty sizably.
Sure, it's an algo play, but if the stock's being liquidated, can just stop trading. There's no more algos.
Strong performer in the telecom space that's been absolutely taking it on the chin.
And a high short interest doesn't matter if
the outlook for T-Mobile really boils
it's
down
warranted.
to what their Sprint merger looks like, as well as free cash flow expectations for a big share buyback program. Another catalyst for T-Mobile could be the fact that we could see market share gains contributing to its 5G wireless spectrum advantage versus
HKD, I think, was legitimately pumped.
So far in 2023,
it's not bankrupt. It's also a Chinese company, so who knows what they're doing with it.
That there is this contamination that's been spread across these telecom companies. I won't get too much into that, Alex, because that is honestly not my area of expertise. But I do know that T-Mobile continues to really
a retest on the low there for SPY.
Advantage. We have seen so many of the analysts that cover this name say that the latest data shows T-Mobile continuing to enjoy a healthy lead over its peers on 5G download speeds and availability. T-Mobile to get somewhat of a jump start on its mid-band 5G deployments over its peers, and also now adding such a substantial amount of users based on that Sprint merger. And I have to say that based on the fact that all day long I have had all my calls drop, I've had like the worst service ever this morning. All of a sudden I'm reading all about 5G from T-Mobile, thinking I just need to switch carriers here, Alex.
You know, I've been just a subscriber or customer of a single wireless service as long as I've had a cell phone. I don't even know how you change it. I'm sure you could just make a call and they'll make it easy for you. But what I will say is there's really been two
BBBYQ below VWAP there
between AT&T and Verizon for the better part of the last 20 years. And then there's some, sort of medium size.
GME still below VWAP.
T-Mobile and Sprint sort of fell in, and then you have sort of your other smaller ones. Well, now you have a big three. T-Mobile and Sprint combining really have become a formidable peer to AT&T and Verizon.
I guess I should have had a stop on those futures.
Performing and
stupid.
Both their longer-lasting peers, let's say. So this is one to watch, no doubt about it.
And the options. I didn't even put one on the options either.
In telecom, because it's certainly been a negative one as of late. Last one on the list is Skechers. So now we're going back to like childhood days. I feel like, Jenny, this is not necessarily a product that I feel like I encounter much anymore.
Okay, so you'd think that, right? But I made the mistake of like maybe 2 years ago, ahead of their earnings, being like, who's wearing Skechers? These are like to me, dad shoes. And I've actually been proven so far incorrect, because they have had a really strong rebrand. And so now you wouldn't even recognize most of the Skechers shoes people are wearing. They also make golf shoes. I learned from producer Rob, who's not here today, but in honor of producer Rob, I will speak more positively about Skechers and their shoes, because the rebrand has been successful. Because I would completely agree with you, Alex, until I saw some of their new shoes.
With this, though, I think this is exactly the case. So it doesn't mean that a company is not successful because you or I aren't encountering their products. We just aren't necessarily their target customer. I know in the golf world, I believe they sponsor Matt Kuchar. You used the term kind of dad shoes. I mean, if I could describe like a dad-like golfer, I mean, Matt Kuchar is that guy. So that's the market, it sounds like, of which I don't know that I'm the target customer for that quite yet.
I am thrilled I'm not the target customer of that. But Skechers, as far as their growth, this is a hugely international company. A lot weighs on China and overseas. So for that reason, there is the headwind of international exposure, but also it could be the tailwind. This name is up 24% on the year, which actually puts it as a relatively strong performer in retail. Now, we are expecting to see earnings per share around 52 cents. That would suggest a decrease of around 10%. They have been really enhancing, though, their digital capabilities, including augmenting their website features and mobile applications, as well as strong wholesale and direct-to-consumer businesses, which continue to aid their overall performance. Also, this innovation and technology effort they've been pushing towards in terms of their
stands with you about Pulte?
really interesting, and something
what do you mean
been
stands
seen
with
as a
me?
positive for Skechers for the last several years. Now, for their direct-to-consumer unit, they're expecting to generate around $763 million.
I have a stand with Pulte.
5% bump year over year. But inflationary pressures also cannot be ignored. Any deleverage in their operating expenses is likely to also add on to a more negative sentiment around Skechers shares. Now, this name's up 66% from its 52-week low. This absolutely floored me, the success we've seen in Skechers, at least on a year-to-date basis, as far as its price activity. Yeah, it's been an extremely impressive looking chart as it trends near, honestly, 5-year highs, which not a lot of names are, increasingly more and more names are having those type of discussions given the strength we've seen in the overall market, but not a ton of them. And so really impressive stuff out of Skechers. You know, Jenny, as we narrow this down, you mentioned all these names have earnings after the close. There's really no right or wrong answer. So an objective way to kind of narrow these down this time around was I just looked at the ones that had the most volume. So you look at Roku, you look at Enphase, they have the most stock shares traded today, and by a pretty wide margin, almost a margin of tenfold. They had about 10 times as much options traded earlier this morning when I was looking at it. So just looking at the ones that maybe had a little bit more activity going today versus the ones that maybe were a little bit forgotten about. Yeah, and I think that's well put, because I was looking also at the volume of so many of these companies that still had yet to report earnings. Skechers being, I think actually we went like top down. Roku may have been the most, and then Enphase, and then T-Mobile, and then Skechers, which I think wouldn't surprise many people, but we'll be diving more into the upvotes, those being the most heavily traded of these names, naturally being Enphase as well as Roku ahead of their quarterly results. We'll be looking at some technicals as well as some example trades.
So I'm just reading about the docket. It says these leases, these are leases that either failed at auction or are always going to be canceled. But that refers to all of the stores. All BuyBuy, Baby, and BBY, all distribution, everything. There's not a single store that is now not either canceled or assigned. The leases have kicked the bucket, shuffled off the mortal coil, run down the curtain, and joined the bleeding. Fire invincible. They are ex-leases. I don't know what that means. Yeah, I've now got a Head and Shoulders here in the 5 minute. Crazy how quickly that flipped. Like literally flipped. Okay, SPY's coming down here. GME. We stuck again. About to keep filling this gap. There it is. Gap's getting filled.
shortest term one, our yellow 21-day, but it's looking like it's been rejected once again here. So kind of a tough situation for traders in this name, really kind of more range bound. We've got a range between about 152 to the downside, this green dashed line, and that 189 level. I suppose you could argue we do have a bit of an uptrend, a very modest sloping uptrend starting with those yearly lows. That would roughly coincide with our volume profile point of control near 164. That's that thick red line right here. That's our area of heaviest trading during the given time period. So that could be a point to look for some support. In terms of momentum, RSI falling off here, slipping below that 50 midline. Not an uncommon situation at all to have heading into earnings, but at the same time, not really what you'd want to see either if you have some kind of strong directional bias. If you were see investors kind of piling into the name in anticipation for the
What's
earnings.
bullish, Sean?
If you were bearish, you'd want to see a sell-off heading into it. So this is kind of more of a no news situation here, kind of just momentum trailing off, price action kind of languishing near the middle of the range that we've been in here. So to zoom in a little bit and look for some potential support and resistance, we can see that, as I said, to the downside, near about the 164 level, we've got our trend line and our volume profile point of control. Then we've got our 152 mark that represents the area around our yearly lows. To the upside, we've got our two moving averages, yellow 21-day, orange 63-day, near about 175 and 178 respectively. Then we've got the 189 level, and that's really the crucial area to crack above. If we do somehow manage to break above that point, we get some strong earnings move that takes us beyond this range we've been in. Look right here. Purple 250
GME is going to go red.
comes in near about 206.
That's the issue with high beta.
So that could be a point where we could see any potential uptrend.
All right, we'll fill this gap and then probably keep
And
going.
I think that's really well put. And I think also a
Maybe.
more optimistic way to paint what has been, somewhat of a lackluster year.
Maybe we're
but
just
seeing some
gonna make
signs
another
of
shoulder over
trend
here.
Reversing now into this earnings
Get ahead,
event,
shoulder,
although
shoulder.
shares are still down about 1% now on the session. So now with this in mind, Alex, walk us through what you're thinking as far as an example trade. I know leading into some of this weakness, but there is a lot of hope here for the future, at least in the mid to long term, for so many of these solar and and alternative energy companies, given the tax credits and the government
This is down
assistance they're expected to
2.7.
receive in the coming months.
Yeah, and
Why?
so for whatever reason, if you even just see this as potentially oversold, Rick talked about the technicals breaking that down.
They're
trend
having
and
options.
potentially turning into a new uptrend. Whatever the reason, I looked at a neutral to bullish strategy, leaning into some of this weakness, as you said, going out to the August monthlies, because in this particular case, selecting a strike that was below that 152 support level to me seemed intriguing. That was the low of the last move lower post earnings last quarter. And so looking to capitalize on that maybe being a critical level, even in the event that this stock moves lower.
Flushing down
Going
more.
Into August, I was still able to create a $5 wide put vertical with a relatively interesting credit. And so for a $1.25 credit, it's 3-to-1 risk reward ratio, 148.75 is the break even. And anything above 150 in which these options were to expire worthless, you simply keep that $1.25. So as we look at the risk profile, what you'll see is this elongated Z that we've come to know quite well in this program and others on the TD Ameritrade network associated with vertical spreads. Because it's a credit spread, we're going to begin, in this case, because these options are out of the money, in the max profitability zone, about 170.
Maybe.
We know that in this case there's an earnings event this afternoon that is likely to drastically alter the price of this stock. So it's $20 of cushion right now, but that can change dramatically just this afternoon. So bear that in mind, of course. That's why you're still able to get this sizable credit on a relatively short-term trade, because there's a binary event on the calendar that could move the price quite dramatically. Break even, as I said, 148.75, and of course the $375 in risk takes place below 145 on our risk profile. That's if these options are in the money. They're signed and exercised, offsetting each other for the max loss, which is the $5 wide spread, none of that $1.25 credit. None of those numbers account for transaction fees associated with costs, so keep that in mind. But Jenny, this is a neutral to bullish strategy, leaning into the probabilities of things here and just hoping for stability post-earnings.
Yeah, and I think that's a really good way to look at it. And I think now, in contrast, in terms of these names have nothing to do with each other, but they both do have earnings day after the close. Roku, while seeing some better performance on a year-to-date basis than Enphase Energy, it is down 3.5% this week. So while Enphase is still holding on to its week-to-date gains, Roku, pretty sizable downside this week. So Rick, walk us through what you're seeing here. Both of these names underperforming the overall market today, though.
Yeah, and it's been interesting to analyze this chart here. There's a lot going on with this one. First, I would say that we have kind of turned a corner in this stock. Ever since we hit those yearly lows near 38, we've made a significant recovery. We haven't made it all the way back, though. We're still down 20% on the year, but we're up 81% off those lows. So even though we've had a nice rally here, we have kind of struggled to make it above a few key technical thresholds here.
We've got PCE in the morning. I could move stuff around too.
We formed this uptrend here. We formed a
8:30.
steeper uptrend starting in about May. It took us above our two shorter term moving averages, our yellow 21-day, orange 63-day. But we never really crossed above the
I don't think he likes that you were bearish on
here.
barbecue, Cameron.
We did peak above them a little bit. We even did actually make one closing high
Oh,
beyond that point.
information on barbecue leases?
We had a sharp drop off.
So you're
the
bullish,
next day
Sean.
after we did make that close above that 76.62 level that represents our old highs. We also had a level that caught my eye, 73. Around that point was a frequent stopping point for price, bottoming out here, topping out here, right here as well, and here. So 73 to about 77 is kind of a resistance zone. Sometimes it's not exactly a clear line, it's more of a general area. And that would be an area to be watching for. Because if you take a look at volume profile here, once we start getting above 73, you can see the trading activity drops off notably. This represents the heavy trading areas here. You can see there was a node forming here, our point of control right here, another node here. Those are the kind of congestion areas that you want to look for. Those can be support or resistance. And we were moving beyond that node into a more thinly traded area. Now, the 76.50 around that point was also interesting because it was our purple 252-day exponential moving average. That's our longest term moving average that we follow. And it's the most significant in terms of support and resistance. The trade-off is that it's the slowest one to react to price changes. So more significant but slower to react is a longer term one. A shorter term one is faster to react but less significant as a data point here. So you can see we failed to breach that level. We had a bit of a drop off here. It was looking like we found a foothold near our 21-day EMA, but today we're falling quite a bit below it. We're forming a bearish engulfing candle here.
Barbecue back to VWAP.
That 70 mark.
So VWAP is much lower than it was earlier today, though.
As I said, around this area here. 73
yeah, I've taken some close some barbecue.
A main point
I've opened up some GME.
About 77 to the downside.
I've done some SPY trades.
Up with the 66 level.
Opened up some dish calls.
Yeah, I think that's really well put, and I think a great way to play
And just
Roku
futures
or
on
Roku
micro
so far
ES.
as the technical front ahead of this earnings event, as there are a lot of eyeballs on Roku, some outsized volume on the session here, Rick, and some weakness overall really into their second quarter figures. So we'll leave it there. Appreciate the technical breakdown as always, Rick Ducat, our chart master. So now looking at trading this name, Alex, completely different, has exposure to the ad space, which has actually been a bright spot for so many companies with earnings this week collectively. But Roku is its own beast. I know you've been down on Roku, but sentiment, I think, has somewhat changed and picked up over the last half a year. So walk us through what you're thinking for an example trade.
Yeah, I respect Roku. I like the interface. I like the UI. But at some point,
BBBYQ coming down here.
Is all my points have ever been. But when looking at Roku in this particular case, this is actually kind of an optimistic look at it. A lot of efforts to kind of break through 80. Rick had talked about sort of that range in the mid-70s that it's had trouble getting through. Maybe this earnings announcement is what it takes to get back up to that level. So looking at buying a call calendar up at that level that is just selling Friday, so tomorrow, and buying next Friday. This is a short-term trade. It's going to make or break likely tomorrow afternoon, or by tomorrow after we get this earnings event. So very much centered around earnings. But because of that, because it's short-term and relatively low probability is something has to happen for this to be profitable, it's only a 60-cent debit. So that means $60 in risk. If we look at the risk profile, it's going to have that mountain top-like kind of spine right at that $80 mark. But the beauty of this is, if you've got an entirely different opinion, Jenny, or anybody at home, if there's strikes available and there's an expiration that fits your time horizon, you can customize this to better fit what you believe may or may not happen in Roku or in any name. So the time spread, particularly the very short-term ones, can be used quite interestingly around earnings. I mean, we looked at Meta yesterday. We looked at a 315 call calendar as an illustration, for example. And if you look at the stock at 315 right now, it's actually quite a nice, pretty relatively short-term performance. So you're not going to, hit a home run, for example, with this type of a trade, but it can be relatively affordable in terms of the efforts to get exposure, and it can turn around some pretty short-term returns if you're right. And that if you're right portion is the most important. If I was writing this out, I would underscore, bold, highlight that, because if you're wrong, it's probably going to be a max loser.
I think that's a really good point. And of course, a trade that benefits the more right you are, as we look at sometimes trades that are more, wide based. This is more specific, so you have to be more accurate. Also, though, important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk like unanticipated exercise or assignment. Now, coming up next, it's time to talk the clear story of the day. We're looking at Meta Platforms as it's seeing some outsized price activity. Shares are now up around 5%. It's actually up 10% earlier on the session, but we'll dive more into those strong quarterly numbers coming up next.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example,
Alright, barbecue broke VWAP. Spy's coming down. See if barbecue can recover back to 31 cents. Yeah, I mean, it did bounce right on this level. Very interesting. I don't think I'm worthy to invest in barbecue anymore. I lost too much money just holding stuff. So I close. Buy coming down. More gap fill. Bank of Japan? When are they doing that? I was trading the yen the other day. I actually enjoyed it. I liked the way it moved. Is that what this big rip today on the yen is from? That's the reason for the spy dump? Oh, okay. That's also when the yen started ripping, it looks like. 1 o'clock? Is that when this happened? Yeah, interesting. Oh, yeah, because it actually did, like, that's right, it, like, crashed there. That was crazy. Good call, Taryn. Thanks, man. That is the sketchy thing about trading currencies, though, is news-driven. It's like trying to trade barbecue, and it's bankruptcy-driven. AC, but there's no reason for them to close. There's no reason for a squeeze to happen if it's just all getting liquidated. Barbecue, there's a good bounce. All right, good. And it happened to just hit that same level. If I say I'm not worthy. Let's all go buy back in now. Sold at 26.30. Let's buy back in at 31 cents. This is the way.
Almost like the way I felt about Nvidia last quarter when we were like, how could shares go even higher? And then they did. It's been amazing to watch Meta Platforms and continue to build on that strength on the year, although giving up some of their earlier gains in real time today.
And still gaining back
80% drop on SPY.
Already had, where Nvidia did that for a while, and then it just went to uncharted territory. So you can
make
make
SPY
an
wants
that
to retest the highs, all-time highs again first.
Over time, Facebook, or now known as Meta, has certainly been at higher prices. So that's one of the more interesting things here. But talk to me about why this is so exciting, because I thought this company changed its name to spend all this money on you know virtual reality and metaverse and all this stuff that I haven't heard about since the last time Meta was under $90 a share, because all it was a ton of money being spent. Seems like this is all.
Well, I'm stoked I was able to make money on calls today. A chart like this.
Wrong. Everything they do now is perfect.
And I also think
that ain't bad.
Their divestiture in their metaverse spending has been something that's been read really positively by the street. But to speak to the recovery, I think it's a really good point. It's not necessarily like they've seen this massive gain in terms of their, I mean, they have, but like it's sort of then recovering from where we once were. And I think that's the different story than names like Apple and Nvidia that are at all-time highs. But to speak to some of the outperformance of so many of these names we discuss on this show that are usually FOMO candidates, Alex, look at this chart. I think this is so cool because these are the 5 best performers in the S&P 500 this year. Nvidia, Meta, Tesla, Carnival, and Royal Caribbean, which are having, I mean, Royal Caribbean off the charts today as well. But
2 of those aren't like the others there, Jenny.
That's true. That is very true. 2 of those are not in the tech space, or we're not calling them the Elite 8, but they're quiet outperformers. Nvidia, the clear winner, but Meta's still holding on by number 2. And this just goes to show the way these names are carrying the rest of the index. I mean, this is crazy to me.
Be a good dink.
It's really impressive, and it puts an extra.
No, not if you bought down here. You're supposed to sell down here.
Carnival and Royal
26.30.
on there, because those are names that you associate with tremendous volatility, because they've had a tough go at it. They lost so much value during the pandemic timeframe. They didn't become meme stocks, but they traded very, like, there was real risk of bankruptcy at times for these companies. So they traded with tremendous implied volatility. As things improved, you'd anticipate outsized returns. You had outsized risk associated with that. At no point was Nvidia or Meta, or maybe Tesla to some, but for most, at no point were those 3 companies sort of seen as bankruptcy risk type stocks. So for them to not only outperform the cruise liners,
yeah, you did it backwards. Backwards,
dink. By that much of a margin is tremendous.
It really is. I saw this chart earlier, actually. On
You're paying
the network,
attention.
and I was like,
You would have heard
"Show
me
this
when I
slide.
closed,
This is
when I
so
opened.
fascinating." But now to break down some of
You'd have
Meta's
nailed it much
actual
better.
numbers. Revenue did climb 11%. This was the first time they
Okay.
posted double-digit percentage revenue growth since fourth
That's all I
quarter
asked for is a promise.
2021. That just goes to show again not only how the efficiency is paying off. But
Yeah, I
in terms
don't
of
really
how
think
they're
that anymore.
reviving
Kind
the
of
growth
faulty.
narrative around
Like
their company. Mark
the
Zuckerberg
GME
did highlight the engagement
idiosyncratic
across their apps
risk
and saying this is the most
is
exciting
over.
roadmap they've seen in a while.
It has
with
been for a
Llama
bit
2,
now.
Threads, Reels, new AI products into their pipeline.
Sometime
launch
around the
requested
split here,
this fall.
once we stop seeing
He
the
did also
cycles.
say AI has been the increasingly dominant story for Meta as they
My only guess
very
is
rapidly shifted
the
their
huge short
focus away
position,
from that
they either got
metaverse.
liquidated,
Zuckerberg does
Melon
say AI
Capital,
remains very much
they got a
their primary
bailout,
near-term focus,
Citadel
while the
got two,
metaverse is poised to have a more
and
longer-term impact.
they
He did say
unwound
in
it
many ways the two
with all these
are
pumps
very
and dumps for
interrelated,
liquidity
but said
over
that
the
in
last
terms
2
of
years.
AI and the metaverse, he does really
Now
like
it's
the potential for also
it's an untouchable stock, which is good long term.
Earlier this month.
If you have a good bull
He
case,
does want
it's
to
a
say-
you know
you did say it's a
AT&T
very long road ahead, and
without any
monetizing
dividends.
that app will be something that's still a work in progress. But I mean, I think the fact that
You had limit
this
orders?
has been such a relatively huge success with
Nice.
our
On that
app is
support.
also adding to the more positive narrative here. Reels is
I
another
didn't even-
really strong metric for Meta
I wasn't even looking at
platforms
that far down,
grow pretty
because yesterday I was
sizably.
starting to get bullish
I mean,
with
Meta
how it broke out of the
platform's
upside.
still the largest social media company in terms of its monthly active users. To your
I
point,
still
how
filling
many
this
of
gap
those are
here.
real users, how many are bots? We'll probably never know, but just to see that $3 billion figure across the globe, Meta is enormous and continuing to just execute very well.
Hey, enough to generate billions and billions and billions of dollars for the company. So, yeah, some of them might be, robotic users or non-human users, or who knows, not that monetizable users, but advertisers are still coming back here and wanting to put their content on these platforms. So they're doing some things right, no doubt about it. The pivot from the metaverse to the AI story has been clearly beneficial as well. From a trading standpoint, though, Jenny, for those who caught this morning on Inside Out on Morning Trade Live, we looked at this exact same trade. But we're going to go back to the well here. We looked at a call counter spread yesterday at the 315 mark. Well, that's what happened. It moved to 315. So now we can look at something different. This is not an earnings-related trade. Earnings is in the rearview mirror. August, September, traditional counter spread at the 350 mark. This is looking for some upside here in this stock, continuing its massive run. 350 debit means $350 in risk on this exact example trade. Jenny, we just looked at this risk profile in Roku, so very comparable. The mountaintop.
It's not gonna get all the way down here and then not fill that gap.
Mark. But again, you can
I don't believe
customize
it.
this to better reflect whatever your particular outlook would be, and it doesn't have to be in Meta. It can be on a different stock. We're just using this for the illustration in this case, but a strategy that has defined risk, relatively low cost of entry, given the stock is in the 315s per share, and it can be profitable if your speculative outlook is correct or in the ballpark of being correct. Obviously, you can see it has to be perfectly at 350 to be profitable. It's just in that area. So a slow grind upwards, continuing its massive run in 2023 towards 350 over the next 3 weeks or so would be exactly what the doctor ordered for this one.
Yeah, this one has been just a story to watch
Doctor.
all year long.
Barbecue back to VWAP.
Yeah, I have to say,
GME.
love him or hate him, Mark Zuckerberg is doing something
green.
right, and he is definitely continuing to only further execute, only please those meta bulls. This name is so now loved by
There's
analysts.
more
You
dreamy
can
calls.
see, on his performance this year.
Not gonna
why
average
so
down on
loved,
it.
But we will leave it there for our FOMO discussion. Coming up next, we will look at a line which also could have been a solid FOMO name today, as shares are up 15% on the session on some strong quarterly numbers. We'll dive more into those with Renita Young coming up next.
Do you think the DTC split without issuing synthetic shares? No, I think they did. Yeah, I think that was wasn't legit. Or I think we would have seen a squeeze. We saw the opposite around the split. We saw a little push, and then that's when it really shut off. Yeah, I mean, GME lost everything. Everything that got me into it. Borrowing fee, it's FTDs, short interest, even though all that's self-reported and they can hide it. What they couldn't hide was their swaps and the rollovers that was betrayed in the price action. You know, we always could see the price action and the volume coming in, and it's cyclically running. And we haven't seen that now since this RC buy-in, actually. The split you kind of did, but and I could still be wrong. It could just be a price thing. There might not be any sort of it's maybe changed from cyclically. Now it's just margin requirements for a certain price on GME, like over 30, which is what we saw during the split here, which is what the Pathrath, or who was that guy? Oh, the S3 Partners guy who said, oh yeah, it's parabolic over 30, and then it actually was. Oh, it wasn't there, it was back here. Yeah, when they shut that down. So maybe it's price orient or related only at this point, but I'm not too hopeful for that. But we haven't seen over 30 again, so possibly. As far as cyclically, it doesn't look like it's doing it anymore. But I think there is still a basket though, and we've seen AMC, GME move together. We even saw Carvana, COS. So it's like it's still kind of there in some form, I think.
In fact, they show that things are lining up pretty well for this company. Earnings and revenue beat estimates during the quarter. Adjusted earnings came in at $2.22 on revenue that grew about 3.4% to $1 billion. And then here's another key thing. Margins for gross margins specifically expanded. However, operating margins...
More share circulation in the float? I don't know anymore, honestly. I don't know. I just know that the cycles, the patterns have ended. And my conclusion to that was that they unwound whatever obligations they had over the last 2 years with all the pumps and dumps of liquidity.
Analysts today are raising their price targets on this stock. Goldman raised its price target to $393.
So yeah, if they're able to ride it with an over-shorted float and not cyclically run it, which I'm sure they could. There's probably a lot of stocks that they do that too. Then yeah, it's still over-shorted, and BBBYQ really flushed down there. Got an inverse cup here.
Like jumping out of their chairs to buy this one. I mean, Goldman seems lukewarm on it. Maybe just seeing this quarter.
I still like BBBYQ on the little longer time frame, though.
But
just need to be more patient with the buys.
It's overdone, turned around.
Got his inverse head and shoulders here.
So certainly
427. I just see that for support.
Those two analysts that you mentioned.
This area.
All I would say is, I'm thinking back to the days where I had braces, and I would have loved to have this as an alternative. So hey, this is a company that the successes that it's had, to me, are a no-brainer. How to value that or where it goes from here, that's a story and a question for another day. But any final thoughts, Renita? Really a rock star quarter for the company.
It is a rock star quarter.
Complex game indeed.
All those folks who do use clear aligners, they understand why it's an easier bet. It's an easier situation than braces.
Yeah, I mean, as we both know from using this product, Renita, it's like a godsend after having braces and all of those various metal devices in your mouth. These are truly wonderful. But we will leave it there. A great breakdown on the line of that nice move higher we're seeing in shares today. Renita Young, senior markets correspondent for the network. Now coming up next, it's time to look at Ford for under 30. This name may be under 30, but it actually has some of the strongest volume throughout our coverage today. They have earnings today after the closing bell. George Tills will have more on that for us coming up next.
Alright, SPY, let's see. How low can you dig here? How dig can you deep? Zim is, oh wait, the Zoom info. Remember Zoom info? Remember this thing ripping because of Zoom? It was like they got the wrong ticker or something. Is that an IPO? When was that? And then they offered shares and like made a bunch of money on it. Isn't that Zoom info? I think so. Way back during COVID. It was here. I can't remember. People just got the wrong ticker. Kind of like how GME. This one ripped at some point. Oh, look at that thing go. 5% today. What do you know? This thing ripped because people just typed in the wrong ticker. That actually had quite the move. Yeah, this was I bought this one at one point on accident also. Yep. Fish down 2.5. I forgot what I was looking for. Oh, Zim. Zim's holding up pretty good. 5.5. I like that breakout on Zim. I want to see gap fill 1730. Same with Zoom. What was it cause? It might pick up some costs actually. Costs. If it fills this gap and finds resist or support at 455.18. Does have that RSI divergence actually. wait on cause. How's TUP doing? Breaking below VWAP now. Consolidation on MNK.
The way the auto market used to be, at least in the new car market, that also might be quite constructive for Ford. So I think this is an interesting quarter because, again, I think overall, if you look at just auto dealerships and the new car inventory, it's starting to increase. And I think that's going to be accretive to Ford. And I think maybe if they allude to perhaps a price discount, that actually might be a good thing for the company and its share price, because of the fact that they'll be moving back towards that higher volume, lower price model versus the higher price, lower volume model that they had in the last couple of years.
Yeah, and it seems like the, I guess, I don't want to say credibility with investors, but let's say trust with investors, that a name like Tesla has sort of won over the last decade and a half as a really outperforming name. When they cut prices for this reason to, like, hey, let's you know, ebb and flow with the cost of materials and spur growth, the streets, like, that's the smartest thing we've ever heard. Like, you know, Tesla, you're brilliant, let's go up today on that news, even though you're selling your stuff for lower prices. Ford does it. The headline reads, no one's buying the F-150 Lightning, so they're cutting the prices. Oh. With a stock that's, you know, I think you said 60% of its earnings or thereabouts is kind of what it projects to give out in dividends, and isn't really seen as a growth company, you know, when you start cutting prices...
5 minutes at 2 o'clock. Thanks, guys, for your thumbs up. I appreciate it. We're at 30 on the day.
Well, that's a good question, Alex. I mean, if you think about Ford, I know they've had some struggles with the technology behind their F-150 Lightning, and plus the high price points might have been out of reach for a lot of consumers. And at the end of the day, you know, this is going to be a challenge for, you know, EV trucks. The challenge is from a utility standpoint, even towing. This has been one of the complaints that I researched on the Lightning is that when people try to tow, it reduces their fuel economy, or in this case, their range from an electric vehicle standpoint. So I think that's a challenge. But at the end of the day, the F-150, their petroleum-based vehicle, is still the hottest truck in the country in terms of popularity, but also in terms of sales volume, and those generate high price points. Also, you know, you have to think about EVs and also the growth in that area, but the fleets. You look at vans and light duty trucks, not necessarily from the private sector, but from the public sector. Rental fleets utilize a lot of Ford vehicles, and that's more of a stable revenue driver for Ford. And I think SUVs and trucks still command a premium in the marketplace. So if they give us some more clarity on their EV sales, if they also give us a little bit more clarity on their production volumes, and if they also denote some stabilizing prices, that might, like I said, be accretive to their margins. Now, from a valuation standpoint, if you just look at the multiple on a forward basis, it's trading around 7 times earnings, and they're expected to grow their EBITDA by 6% on a forward basis. So it's only trading slightly higher than 1 times its forward EBITDA, and so one would say maybe that it's a good value right now, considering they're expected to increase their EPS on a forward basis to over $2 per share on an annualized for 2023. Forgive me.
Yeah, and George, something I always think is like perhaps under discussed with Ford is it's around 3% of their total sales are EVs. So when the EV narrative is so heavily focused on, it's like we need to focus on their other business. That's the other like 90% plus of their revenue, which is clearly more important to their earnings and clearly more important to the company. It's not an EV play at all. I mean, I think that's a good point to make, and also just the good breakdown of what we can expect from Ford. Hopefully we see shares move above $14. We'll be watching this name very closely. George Tills, appreciate the breakdown. Senior markets correspondent for the network. That also does it for Alex and myself for Next Gen Investing. Coming up next, we have the watch list with Nicole Petalides.
All right, SPY's coming a little lower. Looking for ain't too bad on the puts today. My one trade, it was okay. It was calls from like here up to here. Crazy though, just this move right here on dailies at the money, it's like 30%, 35%. This move would have been, I mean, I wouldn't have gotten into them until like here. That would have been 100% probably, maybe more. One last little flush here on SPY. Like Zim for a 1730 retrace. Or not retrace, but cup. Okay, here comes SPY. Look for 454, 660, 70 for the low. If we make it down here, could find support before then though. But nice little bear flag here. It wants to break out. Barbecue background VWAP. Steve Teledoc's doing a little head and shoulders here. Give us a little retrace. 61.8 would be kind of the resistance back here. SPY not going to fill that gap? No way. No way, I don't believe it.
the board has, like you said, turned pretty mixed here at midday.
Yeah, without a doubt. By the way, there was some concern whether or not Mark Zuckerberg could be held in contempt of Congress over the last hour that has passed. They've let him off on that, at least for now. Not forever, but for now. So you can put that aside. But as you noted, this stock at 52-week highs, it has been one of the few that has doubled. An exciting name. Another big tech story, Netflix, Microsoft. Yeah. What happened with that ad deal?
Little unhappiness on the part of Netflix with its overall ad-supported tier done by Microsoft. They think Microsoft's not selling enough ads, frankly, Nicole, and they want to renegotiate the deal. Now, that leaves Netflix down on the day. That leaves Microsoft a little down on the day. But it just appears to me on the surface like Netflix is a customer of Microsoft, and they're not happy with the job they're doing. So it sounds like the Wall Street Journal's Suzanne Veranica, they report that some of Netflix executives have been frustrated that Microsoft hasn't sold more ad inventory. Some people familiar with the matter say so. That's a report there, but it sounds like Netflix struck a deal with Microsoft. Microsoft not doing as good of a job as Netflix wanted. They're an unhappy customer, Nicole, as you know people can be.
Yes, absolutely. All right. So it's not going as well as had hoped. Thank you very much, Kevin Hinks. Good to see you. Now let's take a look at the bigger picture. Jim Schunberg's with us, managing partner, North Pier Search Consulting. Thank you for being with us, Jim. So we heard from Chair Powell yesterday. There's still a possibility of more rate hikes to come. What was your takeaway from what you heard yesterday?
Yeah, I think the market has ultimately wishfully thought their way through the end of the interest rate hike cycle. I think the Fed has been incredibly clear that it's not just baseline inflation that they're looking at, but wage inflation is very much in their crosshairs. And we have not seen wage inflation abate to the levels that I think that they're going to be comfortable with. And so ultimately, thoughts about the Fed at their peak in the interest rate cycle, I think they might be wishful. We could even take a pause. We could even take a cut of a little bit. But we're losing sight of the longer trajectory, which literally could be an upward facing roller coaster over a number of years if they can't truly get wage inflation in check. And largely that's because of baby boomers retiring and the imbalance in the labor markets, and not necessarily because the Fed is able to weigh in on the rising cost of capital.
I see. All right. So at this point, they're looking at not just inflation, going to 2%, but other elements such as wage inflation. And that has, while it has come down, as you said, not to the lowest levels that they'd like to see. That being said now, how do you think the higher rates are impacting the market with borrowing costs at the highest level in 22 years? How do you think consumers will fare in the next 6 months? I mean, they've
Here we go,
quite
SPY.
resilient up to this point.
Yeah, ultimately, my firm
Barbecue
focus is
not
on
getting the
institutional
getting the bounce.
marketplace.
However,
We're leading,
Barbecue did
OCIO research and evaluation
show
firm.
support on that
And
trend
so we're
and
really looking at
volume.
the institutional
There's the
investors
gap fill on
focused
SPY.
our research
Bounce
coverage
volume
is
picked
about
up.
$1.3 trillion in endowment foundation and pension assets. And ultimately, that space, I think, is taking a much more long-dated and sage viewpoint on what's going on in the inflation.
All right, where are we headed to, SPY?
And I'll tell you, I think there's a meaningful
Which
disconnect
support?
between the institutional marketplace and the retail investor that's on Wall Street.
Yeah, understood. I know you're looking at specific areas such as commercial real estate. Your thoughts, because there's so many different facets to that.
Well, you've got a perfect storm going on in commercial real estate, specifically in office, a little bit in retail as well, but definitely in the Class A and even Class B office space. You're getting hit with both higher interest rates, and for those that don't know the way these loans and these leases work, but basically commercial real estate loans come up for renewal about every 7 years, and leases come up for about plus or minus every 7 years. And so with interest rates spiking over the last 18 months, a lot of these leases are coming up for renewal, and a lot of these mortgages are coming up for renewal at the same time that you have this work at home or hybrid model causing organizations like Salesforce, as an
See, now
example,
it's right on that trend
at
there.
the top of this year,
See that?
they left their East Tower in San Francisco, 700,000 square feet of commercial space, looking to sublease that in a marketplace that's reportedly in San Francisco showing 30% plus vacancy rates in their A buildings. You could see at the same time that revenues from rents are coming down, lease sizes are getting renegotiated, downward pressure on pricing. At the exact same time, upward pressure on costs because of those Fed increases, because of that increase in interest rates, really is creating the potential perfect storm and potentially a crash in the office commercial real estate space.
Look, I mean, there's no doubt, and with the new work from home sort of setup, it's just not the same. A buildings, as you said, probably much better off than B and C buildings. We see that right here in New York City. How about the other side of this in regional banks? Because there are regional banks that have exposure to commercial real estate, and already we've seen some regional banks failing this year.
Yeah, that's an excellent point. I mean, that could potentially be the other shoe that drops. Most of these commercial real estate loans are held on the books of, or many of them, I should say, of regional banks, those same regional banks that were put under pressure with their bond portfolios with the spiking interest rates last year that we saw lead to the Silicon Valley Bank failure, the Signature Bank, First Republic. And so a lot of these, and by the way, this is not, this is the large institutional banks are not immune to this as well. But ultimately, these banks, not only will they be facing challenging loan renegotiations, but they literally may see and probably will see asset owners in the office retail in the office
Green to
commercial
red.
space turning the keys
I don't
back
think
in.
it's
Now the
over. I
banks
think
are
we'll get a
becoming
bounce here.
operators in a
Probably
very,
end the
very
day at least
challenging
green.
And at this point now, how concerned are you about a recession?
I'm thinking
or a stock market rally
454,
that fizzles? I mean, you're an institutional
50,
investors that you follow so closely.
somewhere in this
Will
range.
they
Getting
maneuver
close.
through that kind of, and what strategy would they use?
Yeah, the outsourced chief investment officer industry, the OCIO industry, these are the firms that discretionarily manage this large institutional pool of capital. They are concerned, and they are concerned about the valuation spike that we've seen recently in the equity markets. There is clearly some, I'll just call it trepidation about the second and third wave of what might be happening economically. And generally speaking, we've seen these same institutional allocators start to shade away from commercial real estate, even up on their value versus growth mandates.
Probably flip from short to long.
Potential further damage in the banking
One
sector.
point soon
But
here.
net, to your question, if the headlines start to really reflect a crisis, and there is potentially one brewing in the commercial real estate sector, we're talking about trillions of dollars of vulnerability, then that could be the new crisis du jour, and that could pop what possibly
Crisis
right now
du
is
jour.
a new valuation bubble.
The crisis of the day.
Jim, thank you so much. Jim Scheinberg,
Pleasure.
managing
That sounds
partner
good.
at North Pier Search Consulting. Later this hour, we'll check in on today's selling that we've seen for Chipotle and what it means for this giant in the fast
GME getting
casual
dunked on.
dining space. And
No,
we'll take a
holding
look
up.
closely
I
at
like that kind of
REITs,
beta.
find out why data centers, self-storage
Only
REITs,
positive.
maybe those are the better
Only on the ups.
performers of the group and why. Our panel will cover the telecom stocks ahead of T-Mobile.
Four is coming down.
AT&T
We got NAC
around
popping
these
up today out of
pre-built
nowhere.
lows. We'll find out what's in
That
store for
volume,
these
what's going on with the
types of
mine?
companies moving forward. And up next, discussion
You
with
guys got
Jeffrey
mine news?
Kornkup of Charles Schwab. We'll talk about central banks, earnings, the Fed going forward, much more coming up.
A lot of volume today. What's the news on here? Oh, I got another GME contract filled. Got a little flushy from that. BIG coming down more. Want this to hold here, this right shoulder. I did average back into more GME calls. Oh boy. Hope this breakout isn't a false one. And Buy's now down a quarter. I'm out. Close those shorts. Look for a long entry. Go back along there. I don't have all those GME calls I bought. Ran out of buying power. Oh, and Dish. Dish. Sorry. That was me. Let's try to use my other account.
Spain has already seen inflation retreat to under 2% after peaking above 10% last fall. Spain has consistently led Europe's trend in inflation.
Still renting it? Are they actually renting at those prices or just listed at those prices?
And then phase out government aid during the pandemic. And it's pointing pointing to is that Eurozone inflation may track Spanish inflation
Great
lower
movie.
as it has, and maybe at the ECB's 2% target by the end of the third quarter, and no need for a rate hike in September. European stocks are trading at about 12 times earnings. That's below their 10-year average. So signs that rate hikes have come to an end could support valuation gains for European stocks.
As I see this picture here, this chart with Spain obviously leading the way and dropping below that 2% level. Right here at home, Chair Powell has said they expect to get to the 2% level, but not until 2025. Do you think that could come sooner based on those charts?
It's possible. There are some stickier.
Watch for GME to rally
in the U.S. in the service sector
with the
than what we're
SPY
seeing
bounce.
overseas. The U.S., for example, counts housing
Wow,
inflation
GME went red
differently
too.
than many other countries overseas. So some of it gets down to a different way in which we calculate inflation. But I do think the Fed
I think
will
it's calls for tomorrow. That's the
recognize
way.
that global inflationary pressures are easing. There is an upside risk, I think, that no one's really focusing on, and that's the potential for extreme weather events pushing, making supply chain issues more difficult, maybe pushing up energy and food prices. That's not my base case, but it's something I'm keeping an eye on.
Yeah, I saw that with your El Nino and talking about, I guess that's part of the weather events to which you're referring.
Yeah, cocoa prices are up 3% today, bringing this year's gain to 38%. We've had heavy rains in West Africa threatening supplies. Weather isn't usually something we talk about on your show, but that could change. We've got the potential for some extreme
Okay, I got calls for
weathers.
tomorrow on SPY.
Extreme heat is being felt everywhere.
I'll hold these
Everyone
overnight.
watching this show has felt some extreme heat here in the last few weeks.
I
Airlines
got
are using more fuel due to the
455
heat because they have
calls.
less dense air. Hospitals in the southwest of this country are seeing the most emergency room cases since the pandemic, and water levels in Europe are either making it impossible to get cargo moving along rivers or too hot to cool nuclear reactors, bringing electrical supplies to be cut. So there are many different impacts, but El
That
Nino
gas sold off.
worsening these extreme weather issues could cut food production. It could impact the movement of goods and supply chains. It could cause losses for insurance companies and even geopolitical unrest due to food shortages. So it's something I'm watching and could have the potential to push up inflation and cause maybe some central banks to not be able to put a halt on their rate hike. So something that's a
Oh, bank is trading at a discount, not PacWest.
So look, I mean, as you said, it's difficult to forecast, hard to predict, but something that markets and people, investors, could be vulnerable to if the economic backdrop were to change. I mean, right here in New York City today, the feels like is 102 degrees. And just last weekend, we had more rain out east than we have in 100 years.
Yeah, I mean, you still see some high prices, but it's like, that's it. You're seeing the prices. That means it's still available.
Some of those things are happening
Good,
all over.
market prices you don't see very long.
What else you're watching here at home? Like we did, for example, get in GDP and durable goods, and we're waiting on PCE tomorrow. Is there anything that you're focused on?
I guess there's a PCE play. I forgot about that. Whoops.
One of the things I'm focused on here is the job pictures we get to the jobs report. I know the initial jobs number for claims was lower, but it's almost always gone down in July. If you look,
yeah, I know, it's crazy. It's crazy how long everything's held out.
Where claims didn't go down. No one gets laid off in July. I don't know why. They're on vacation, I guess. It's hard to fire somebody when they're on vacation. But I'm going to be listening for more comments about layoffs and workforce reductions in the commentary from business leaders on earnings calls. So far this season, layoff discussions on calls with shareholders outnumber.
Well, hopefully PCE is bullish.
About the inability to hire or labor shortages. I mean, just today, Anheuser-Busch announced hundreds of layoffs in their operations in the U.S., and money manager T. Rowe Price announced it was reducing its headcount by 2%. So this is something that I think is important because I don't think anyone's expecting sudden or deteriorating labor market in the second half of this year, but that could begin to undermine confidence by consumers, which has really gone up even as the economic picture has softened a little bit here this year. So that's something I'm paying close attention to as we move through the earnings reports.
I mean, when you look at what's going on in the labor market, we still have a very tight labor market, but these are the types of things that people are watching. There's still concerns about a recession here at home. You once talked about how we were looking at the supply chain. I think that, we went from concerns, we had nothing, right, and then we had a glut, but now I'm starting to hear supply chain issues again, too.
Yeah, there's the potential for a crunch there. We're certainly seeing it in Europe. I mentioned the rivers. A lot of transportation moves by rivers in Europe, but it does in the U.S. too, particularly agricultural commodities as they move down to ports to be exported. So river issues are something that could take place in the U.S., but definitely weather. I mean, you know, we were less concerned about the hospital situation and understaffing in those hospitals, and now we're back to seeing very high number of heat stroke related emergency room visits that could create pressure. And just so many other issues tied to weather in terms of energy supplies and the like. So it is something to keep an eye on. I don't want to make too big of a deal out of it, but we are in a position where the global economy is vulnerable to a shock. This is one that's off many investors' radar screen. So I'm not saying it's my base case, but it's something I'm watching that most people, I think, haven't quite considered.
Look, and you talked about the earnings picture here at home and abroad, and talking about in Europe, for example, trading around 12 times earnings, and they don't need the positive surprises in the same way, as you said, as maybe we do here at home, because we're pretty frothy. Did you have a final 10 seconds? Go ahead, Jeffrey.
Final 10 seconds is, we've heard from some of the big tech names, but the mega caps are really important here during this earnings season in the U.S., not so much overseas, where we're seeing broader performance by the stock markets. International markets, on average, outperforming U.S. stocks this year.
Yeah. Jeffrey Klein, TUP.
Yeah.
Wonderful to see you, as always. Chief Global Investment Strategist, Charles Schwab. Thank you. Coming up next, we're watching Chipotle and those earnings, and the shares have plummeted today after
come back down to retest the low.
This company over the last, I would say, almost 2 decades. So we'll find out more coming up.
I know, Guts. What do we do? We talking about barbecue had a great bounce. Inverted head and shoulders here. Bounced off this trend from the beginning of OTC. Showing its support. Ooh, SPY's coming down more. SPY breaking the low there. So I want to form a full inverse cup here. Brings it down to 453. 85. Flashy, flashy. Oh yeah, SPY's going for it. Wow. GME get dunked on. All right, there's your full inverse cup. So the fact that they pulled it that low, I probably want to get on my calls pretty early tomorrow. I mean, I guess we're just waiting on PCE, but we might be forming a little head and shoulders here now. And the right shoulder will be this cup handle. See that? 50% retracement is right at that shoulder. So down 50% on those calls. Jeez. Forward Intel for earnings play. Nice, Taryn. How much I have to go do that? They dropped a bunch of dockets today. Psych you up. And then yeah, that's true. There's court tomorrow. Yeah, I had already done my option play on the SPY today, so I didn't get to ride that wave down. Did with the futures, but not my options, unfortunately. But I was able to make money on the calls, which I'm more stoked about that than just profit in one day. Building good habits and good trading technique. Do it profitably all the time. Fleshy GME, fleshy. Look at that. Right at the breakout level, it breaks out the upside and to the downside. Yeah, so GME, I don't know. SPY's needs a bullish PCE tomorrow. We've got a head, we've got a shoulder. Possibly this little stop here was the right shoulder. Or not, because this could just be an inverse cup, and then we'll get a handle, which will be a right shoulder. I think we'll probably get a bounce. Hopefully it happens when the market's open. Yeah, you can look up the court docs. I don't think they have any leases yet. I don't think there's anything left to sell. Apparently no distribution centers or store leases are left. So
similar to the quick service space at this point.
Yeah, barbecue dump.
We really need to have some of this, the operational excellence that we've seen from both Chipotle and Kava. You know, the one-to-one marketing effort that they've done, the great expansion, plans that they have, smaller markets, and one of the things that Chipotle and Kava both have done well is moving more to suburban markets, where we've seen migration to with our data, seen a lot of that migration in suburban markets, and they're well positioned to capitalize on that as well. Yeah, RJ Hanavi, thank you. Head of Analytic Research at Placer AI. Thank you. Still ahead in the second half of our show, we'll talk rates and we'll talk telecoms. All of these stocks are very
SPY is just
broadly held in many
blushing.
portfolios.
I didn't have any more day trades, so I couldn't practice good risk management on those balls. Well,
new highs of this year, though it's in the red right now.
yeah, it doesn't seem very good. Psych you up. All the other bad news about barbecue, though, is somehow turned bullish, so we'll see. Market's down 0.4%. Wow. We might not end up green. Have to wait till tomorrow. Get any of that handle done. Yeah, GME. All depends on PCE and SPY tomorrow. Wow.
Verizon, Nike, those are weighing on the Dow, and so it's looking at this moment like the Dow will snap after 13 sessions of gains, might snap that incredible run that we saw. The S&P 45.
All right, this is pretty interesting.
The year that we saw today, it's down 17 points, and
that
the Nasdaq is the only one.
That yen news is seems to be weighing pretty heavy.
Look, the market is really now. You're starting to see some profit taking. 15,502 in the Russell.
Yeah, that's very fleshy.
Those small caps under some pressure. Ben Lichtenstein is with me, senior futures contributor.
I'm not expecting it to really break through this low here.
You see this turn happening here. Tell me more.
Yeah, we've gone from positive to negative here, Nicole. Two of the four majors posting new intraday highs for the year. The Nasdaq has now, well, looks like it's headed negative, right around unchanged after being up over 1% earlier today. A strong move has been reversed, to say the least. It'll be interesting to watch how the market fares into the close. I think some of this is tied to rates, which have been inching their way higher after the Fed announcement yesterday, and some of the data we saw earlier this morning. Jobless claims coming in, lowest levels we've seen since January. And, well, taking a look at the SPX, we just posted a new low as we speak, down to 45.45. You've got the Dow on the right. Both of these were the two products that did post new intraday highs for the year. So the Dow from 35,645 down to 35,333, and negative down on the day by about 0.5% here in both of these majors. But
dang, big sell.
Again, as you mentioned here, that long winning streak that we saw in the Dow looks like it might come to an end here if we were to close at these levels here, Nicole. I think a big part
I don't think
of
we're
it
going to close these levels.
The market coming to grips with this higher rate environment. The 2-year inching its way back up to 5%. A big move lower in Treasury futures today. Again, stronger than expected data. This all ahead of some closely watched inflation numbers tomorrow. Personal income and spending numbers. That's one of the Fed's more closely watched data points. The PCE data as well here. So lots to keep an eye on into the end of the week. A busy week it has been already with earnings, eco data, and the Fed.
Tried to call the bottom
the VIX
too
just,
soon.
Earlier today
too much.
Had been at 13. Now it's at 14.32. So you see that's creeping higher too. Let's get to oil, because that hit $80 a barrel and still holding on, at least still near there.
Yeah,
I have an hour and a half left. We could have a big bounce into close.
$80 a barrel. It's actually come back off here, and
GME is flushing with it
earlier today, but in line with the trend that we've been seeing, crude and the indices continuing to advance, just taking a bit of a step back from the peaks that we saw earlier this morning. Here's a look back at the move from
BBIG flushed through there,
all the way up
filling the gap.
Through the $80 level.
That doesn't look good either. Wow.
Multiple bullish
not holding that right shoulder.
Part of the lid, I think, in terms of the rally here came, and the run-up got halted by some of the activity we've seen in the dollar. The dollar's seen a nice move up with some activity in the currencies, specifically the euro currency has been selling off, but the yen saw a volatile session today as well. I had Dan Deming this morning a managing partner from KCAM Financial, join us on the Future Show. And he talked about crude oil, how well, as we step away from the look at the run-up we've seen over the last few weeks on the hourly candles. Here you can see we're relatively contained. He said, as long as we hold below 85, this is not necessarily going to be a major factor, a headwind for stocks at this point. $90 even we talked about. There have been a lot of bullish factors here. I just wanted to kind of bring the two conversations together.
AMC's down 10, 9%.
Here, this chart really shows the run-up we've seen off the October.
Just fill that gap almost.
35 up to and through 4,600 in the S&Ps. But notice how crude really has lagged for the most part amidst some of those demand concerns. I guess I'm wondering, is this recent run-up above 80 the start of a resolution to that divergence that we've seen? They don't always track each other tick for tick, but we watch them over the longer term. They tend to follow each other very closely, both a bit of an indicator in terms of economic conditions here and globally, here in the U.S. and globally. So lots to keep an eye on there as well, whether you're talking commodities, currencies, or indices, Nicole. Again, very busy end to the week as we head into that last trading session tomorrow, Friday.
Yeah, and it was only a few days ago that Goldman Sachs was talking about demand for oil and China stimulus and seeing it, moving higher, and here it is. Thank you so much. Good to see you. Let's switch gears and turn our attention over to real estate. Joining me right now, Ed Pierzak, Senior Vice President of Research at NAREIT. Thank you for being here. So there are REITs.
Thank you.
REITs. I hear so much about this and the different types of areas. There are some areas that seem to be doing much better than others. We know it's a high mortgage.
Yeah, we saw that.
Tell me about the world of
Cameron
REITs.
mentioned that earlier on that Ford trade.
So, we just came out with our mid-year report, and we're really looking at the state of the real estate market. And two things really come to mind. One is divergence between public and private real estate valuations. And the other really centers around refinancing. And while REITs haven't been immune from the mortgage market turmoil, what we find is that they actually have been fairly well insulated from it. And in fact, when we take a look at our T-Tracker data, we find that REITs really do have strong balance sheets today. They have low leverage ratios. In addition to that, they predominantly utilize unsecured, fixed rate, longer term debt. And that's really put them in a great situation to ride out the current economic and capital market uncertainty.
Happy Thursday to you too, Daniel.
And so with that is, assuming that these have strong balance sheets and a lot of these stocks have sold off, is getting into REITs a good idea? I mean, there's different types of REITs. You talk about actively managed REITs versus passive. What are you seeing, and where do you see the most opportunity?
So I think that there is an absolute tactical opportunity to get into REITs. Whenever we
Looking
do
for a
see
long
these
here.
divergences, we often see
waiting to see.
on average REIT total returns not only bounce, but at times surge. And then when we take a look at the opportunities in REITs, we also see that there's been an evolution in the index. You go back to 2000 and probably a little bit north of 75% of the index was the traditional property types. Now we include a lot of.
We're getting an engulfing candle on the daily. Look at that.
Cell towers, data centers, healthcare.
Big engulfing candle.
And with
looking
that,
good for any calls.
Just really a great opportunity to access
Volume's
the full menu.
pretty low still today, though.
Economy sectors via REITs.
You mentioned cell towers.
We'll probably match yesterday's at least.
Those seem to be the places that have been doing better, right? We talk about, they always said do something that if you're doing REITs to have where they have medical businesses. You mentioned healthcare, or rather than just office space. Are you staying away from office space?
Well, we're not really making a bet on sectors here, but what we do see is that there really are quite a bit of opportunities. On the one hand, for example, if you look at data centers, and really data
this was all triggered from
in addition
Japan
to that,
raising rates,
a
huh?
lot of the new developments in AI and the expected developments. Not only will it help influence the design of those centers, but also increase demand. And then on the office side, I think that there's a few things that we need to remember as well. Number one, we're in the midst of this natural workplace experiment, and we really won't have the outcome for some time. In addition to that, with hybrid work and work from home, a lot of employees may not be going into the office as much as they used to, but we do see that their employers continue to pay rent. And then lastly, I would say that when we take a look at performance of office, we do see that it's been bifurcated a bit. So when you take a look at some of the newer, highly amenitized properties, they tend to do quite well. And in fact, when we take a look at office returns, they've had a bit of a bounce. So since about mid-May, they're up about 30%.
So with those areas and those sectors being the strongest performing sectors of the REIT category in 2023, do you have specific names that would represent those or ETFs that someone could take a look at?
Yeah, unfortunately, I can't give any specifics with respect to any stocks or investment advice.
That's fine. That's fine. I mean, what are your thoughts on what's going on with rates overall? Because a lot of these things come due every 7 years. We're in a higher rate environment. You have leases that have to be redone and such.
Yeah, so
I'm taking along there.
Rates can cause challenges for real estate. And you could see it in the valuations via cap rates and then also in
Might
the
get stopped out. We'll
debt.
see.
And so
Got 15 minutes to power hour. Got VWAP way up there.
Concerned about refinancing. And
I don't think we'll make it to VWAP, but
take a look at REITs, they've had relatively
might make
low
some
leverage,
retracement
but when you take a look at their average
by end
term
of day.
maturity, it's nearly 7 years. In addition to that, the average interest rate on their debt is below 4%. And then again, utilizing a lot of unsecured debt, which is really a competitive advantage for public real estate.
Yeah, Ed Pierzak, Senior Vice President of Research over at NAREIT. Thank you very much. Good to see you, Ed. Thank you. Still ahead, we'll bring in our panel, turn our attention over to telecom, AT&T, Verizon. Some of these names have been under pressure. Look, AT&T really around 30-year lows. In the meantime,
I just went long on the MES futures, just to little scalp, and then I actually got SPY calls for tomorrow, but that was before we broke through these levels. I wouldn't have if I saw I was breaking through here and making this full inverse cup, I wouldn't have gotten them. So I was a little early. Can't get out of them now, so I'll just hold and hope PCE gives us a little gap up. I don't know what's gonna go on with tomorrow. Broke the level that I wanted to hold yesterday. It broke it so far that I actually bounced off of another support, so who knows, man. You know what I mean? Like, I didn't want to break below this 30 cents. Looked like a nice flattening bottom. Flush through there, but this is all because of dockets. I think. And then it kept coming down, and then it actually bounced off it here. So if it can continue to hold this trend, TA wise, like, that could still be good. If it breaks through here, then nothing's looking good for it. But it's kind of a dumb one to trade with how it just moves with dockets. As far as trading with TA, it's been a smart one to just buy the biggest dips on the worst news. So I don't think I'm worthy to trade it. I still have some. But I mean, I don't know what the dockets say or what they mean. We're all kind of just interpreting what they mean. I haven't read them yet. I've been streaming here, and from what I've heard from you guys in chat, it sounds like they don't have any leases or distribution centers left. So was I holding on to that for anything? Not necessarily, but it does just seem like more liquidation. So I don't know. Be quite bearish if SPY closed down here today. That would set up probably for a gap down tomorrow. Yeah, I'm out of that long. Dang it. Wait. Tesla's down to 2.4%. Closing out of some of my Tesla longs.
You know, T-Mobile was the underdog for the longest time, but once that Sprint merger went through and you know AT&T and Verizon kind of lost their footing, it really allowed them to surge ahead, and that's come through market share gains, an incredibly strong 5G network, and so you know they're running ahead while now AT&T and Verizon are struggling to keep up.
Yeah, I want to hear more about that because from what I understand, you have a buy on T-Mobile, whereas you have sells on AT&T and Verizon. And, you know, I think the 5G was what tipped it all off because every time I asked a guest about 5G and who was best positioned, I kept hearing T-Mobile. Tell me more, what are you thinking here, Jeff?
Nico and Keith, hello. You're absolutely right. You know, the industry, the wireless industry, the telecom industry has been with us for 150 years or whatever it's been, and it's been had a series of ups and downs. But you know, recently, Verizon and AT&T have really been struggling. They got off track, and they're really having a hard time recapturing the growth that they had before. T-Mobile is not having any problems.
For sure, psych you up.
To grow rapidly, but I think they're taking business from Verizon and from AT&T. So the traditional, if you pull the camera back and you look at what's happening in the industry, the traditional wireless business, the traditional wireless services are slowing down. Everybody who wants a wireless phone, a smartphone, has it, and T-Mobile is taking customers from Verizon and AT&T. So you have to look at what the next big growth wave is going to be, and there's probably going to be several. But private wireless is one of the next big growth waves. I think that's going to be going on in the industry, and you know you're seeing all three, Verizon, T-Mobile, and AT&T, moving in that direction. But you've also got a lot of competitors in that space, like Qualcomm and Cisco and Betacom and Federated Wireless and NTT and Ericsson with Cradlepoint and Intel and Samsung and a whole lot of others. So, you know, you're going to see movement in the wireless space. It's not going to be the same industry that we have grown to get to know over the past 10, 20, 30 years. It's growing and it's changing. And I think with AI and with all the rest of the technologies that are coming into play, it's going to remain one of the hot technologies. It's one of the most important spaces to be. But the carriers have to find a way to reward shareholders. They have to find a way to continue to increase earnings. And right now, Verizon and AT&T are just really struggling.
Yeah, and when we think about this, Keith, I mean, look, AT&T, we've spoken to the head of investor relations a few times, and they kept talking about the investments that they were making on changing over away from copper and into fiber, and it just felt great. What are they missing, and why are they the laggards here? Is there room to run?
Yeah, so I mean, what we've seen in the last 2-3 years is the companies have spent hundreds of billions to deploy these new 5G networks, and also, AT&T and Verizon investing in fiber. But there really hasn't been a payoff, especially on the 5G side. We saw, when 5G launched, consumers, they didn't care. Consumer adoption has not been driven by a desire to, get the latest and greatest. It's been driven by the fact that new phones have 5G as a feature, from the start. And so, that's what's driving adoption. Now, looking next year with the deployment of these new 5G standalone networks, this is where all the really cool technologies of 5G will come out. We get network slicing, so that will allow, private networks to be set up using their existing networks without, expensive hardware deployments. You have ultra low latency communications, which will enable, a lot of machine-to-machine communications. These are the technologies that are going to be the payoffs of 5G. And so, looking towards 2024, companies are going to have to prove that this, $100 billion network is actually making money for them. Because right now it's not. It's just, an extension of 4G LTE. And so, if you look at the wireless sector compared to the S&P 500, it's severely underperformed. And while T-Mobile, from our perspective, it's kind of the best house in a bad neighborhood. The income investors who own AT&T and Verizon, they're not buying more of it. In a rising interest rate environment, you have a lot of other attractive high yield assets. So, you're waiting for that payoff of 5G, and that's not going to come for at least another 3-4 quarters.
Jeff, quickly, you talked about Qualcomm, Intel, Samsung. We know the obvious names. Are there names that seem to be the best position to you, and why your favorites?
Well, the economy is really playing a difficult role in the wireless industry today. And that's one of the reasons that 5G really isn't performing well, because people are just having a hard time affording it. So they're moving to some of these resellers. So the resellers in that marketplace, which is not in the private wireless space, but the resellers are going to continue to gain market share and taking business the way T-Mobile is, away from AT&T and Verizon, so people can save money. But you've got Qualcomm, Cisco, Betacom, NTT, Cradlepoint. These are companies that are really positioned well to grow in the private wireless space, which is really growing. Now, AT&T and Verizon and T-Mobile also are going to be participants in the private wireless space. That's a new battleground that's being set up in the wireless industry.
Thank you both so much. I'm sorry we have to leave it there. And T-Mobile will be reporting its earnings after the bell. We'll watch for that. Jeff Kagan, Keith Snyder, thank you both very, very much. And thanks for being with me, friends. I'm Nicole Bettelides, live for the Watch List. Keep it right here. Market on Close is next.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. The Platform Demo Webcast series is designed to help you broaden your knowledge of tools and resources available from TD Ameritrade. You'll learn tips and tricks to help navigate TDAmeritrade.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange new location with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell ringers, traders, and stock pickers, keeping you informed as you navigate your investments. Don't miss Trading 360 at 11 a.m. Eastern and the watch list at 2 p.m. Eastern, live from the New York Stock Exchange, only on the TD Ameritrade Network.
It's a 13-hour flight. That's not a weekend trip.
15 minutes
Oh,
away.
wow.
I gotta take off.
Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set. Have a great flight.
Hey, thanks.
We'll see ya. Ah, they're getting so smart.
Choose the app that fits your investing style.
Good afternoon. Welcome to Market on Close. I'm Oliver Rennick. It's Thursday, and markets have changed a little bit since the last time I saw you. We're down. Pretty hard fade all the way down. I mean, I'm talking all the way down. That was a pretty big rip this morning. Looked like we were formally in bull paradise, and then guess that's when you get caught off guard a little bit and things fade. That being said, on the margin, things have been fraying a little bit. That was the subject of my Market Minute this week. The question really is if stocks were going to have any trouble dealing with a big move in bonds and a string of just eye-poppingly good economic data. I think we might be getting a little bit of cold feet in that regards. Don't want to make too much of a 0.5% drop for the S&P 500 and quarter for the NASDAQ, but considering that Meta lifted markets on the back of its shoulders this morning with all the other big tech names higher, it's a pretty substantial fade. And considering that yesterday we had a very accommodative tone from Jerome Powell, still towing the line with a skip-style policy, maybe with one more hike in the bank. Other than that, everything went pretty much according to Bull's plan. This is a little bit of a heads up because certainly this day could have gone very differently, but instead bonds kind of got out of control. And the dollar, which is not showing up here on our movers correctly, so just a heads up, the dollar is extremely strong today. The dollar is actually back above 101. Looks like our ticker there got left behind at some point, but that's all right. The other ones are intact. Obviously, the move in Meta's holding still with a 4% gain. Hasn't erased all of it, so that's really your strong point for big tech, and chip makers are doing very well too. So there is definitely a halo effect from the big AI revolution we've been told that is going to spread across the sector, and you do get a little bit of that with Lam Research having a great day. This afternoon we've got KLA 10 Core. So that's not really the issue at hand necessarily. It does seem like the issue at hand is back to a macro one with a surprisingly intense bond sell-off. 10-year yields pushing back towards 4%. The 2-year yield ready to make a fresh 52-week high. These aren't exactly the ideal pages of a bullish playbook. Doesn't necessarily
Power Hour, new low of the day there. Market's almost in panic mode.
And things have been surprisingly good for the economy. This morning's numbers, again, were just extravagant in their capacity to blow past expectations.
Counseling session of opium.
Weeks, really months of the economy proving to be stronger than economists thought. They still haven't quite been able to change their data expectations fast enough in real time, and we smashed through expectations.
Even if VC is good, we might just continue to sell off, honestly.
To impress with lower than expected
Yikes.
figures, even though we still heard Jerome Powell yesterday kind of ride that fence on the economy, saying, okay, maybe the outlook's better, perhaps we don't get that imminent recession that some Fed forecasters had been preparing for, but also we're worried about lagged effects and the impact of rates, and we got to be patient to see what happens. The economic data is really suggesting there's not a lot of patience. The economy looks like it's about to take another big leap forward or bounce back. Maybe it doesn't turn all the way around, and maybe we don't have paradise down the road for the economy, but it certainly is far from the hellscape people were trying to paint 4 months ago when regional banks were under pressure. That group is under pressure again today, but has had a really good 10 days. This is an economy that looks
Maybe that is the top of the market.
Problematic inflation. I think that's what we're dealing with here. Again, don't want to get too carried away. There's a better move there in the dollar that's showing you, even in the face of aggressive central banks in Europe, maybe the Bank of Japan, we'll find out tonight if they tweak anything on the hawkish side. The fact the dollar's really jamming here with yields pushing higher to 4%.
BBBYQ almost red.
That the Fed might have to be a little bit more aggressive than what has been part of the narrative in the last couple months. Crude oil still.
That makes sense.
Moving higher and firm.
Market got its news. It was dovish.
Very interesting to me. I think this is a really interesting
Big
thing that
pump,
you got to pay attention to.
but really it's just a dump.
Dollar up, crude up. It is
We'll see tomorrow.
Violation.
We did break some levels though with us down here.
Dollar putting pressure on commodity prices
Below kind of this 455, and then definitely below this inverse cup.
With commodities in the dollar. But this is what happened in 2022 when inflation was a big problem. You had crude
Still more flushing. Wow.
going up late 21 and early 22. So the fact that we get that again here today, we are starting to really get some mounting evidence that some of the inflationary pressures are not exactly as rosy and disappearing as I think bulls wanted to. Not sure why we picked today to fade it down like this, but the economic data this morning seems like justification enough if you want to argue that the Fed's going to have to be more aggressive than they think and that markets aren't ready for that. This is as good of a day as you could point to for some kind of potential lingering bear case. And Bitcoin down 1%, so clearly there's a little bit of risk off that's been there throughout the day, kind of building. By the way, coiners, this is not a good look for you. I hate to say it. I don't hate to say it. It's not a good look for you. Bitcoin's losing its correlation to stocks as stocks have been so firm. So if Bitcoin couldn't take
An RSI divergence there on the 5 minute.
What happens if stocks slow down
Go
here?
for the bounce here.
History tells us that's not good for Bitcoin. So I'm not sure what the bull case is here for BTC, frankly. All right, Kevin Hanks, Renita Young joining me here. Get through a lot there. I mean, it seems like, Kev, the data from this morning are kind of hijacking the session somewhat.
Exactly right, Oliver. What can stop a market that looks like it's got everything going for it? Higher yields, higher dollar, higher crude oil. And that always spells, and I talked about it this morning, I mentioned it very briefly on your show this morning, failed rallies. Watch for failed rallies when the dollar and yields are climbing higher, Oliver. And, you know, when you least expect it, things show up. But there's some pretty ominous signs here. How about this sign? Microsoft is now $36 off its high. And if it closes here around 331,
Here's my sim calls.
50-day moving average. There's a lot of these stocks that have some room on the downside if technicals start to come in here. And with a dollar that's firming up, with 10-year yields now over 4%, suddenly we're looking and feeling real expensive. And the message here is the economy isn't the stock market, and the stock market isn't the economy. And one can get better while the other one gets worse, Oliver. It's a time-old theory. We may be living it right now. Things are just getting too good here.
The market's connection to bonds, to your point, Kevin, we all know what the story was last year. It doesn't necessarily have to always be that way. Historically,
6% bounce there on BBBYQ.
Periods of economic growth.
See if GME gets some love.
Showing us that we still do have some sensitivity on that subject, that if it happens too fast, it's going to clamp things down on the bullish side?
Well, here's what I've learned in my career. Stocks can go up when yields are rising. They rarely go up when yields are spiking, though, Oliver. That usually shakes the confidence of the market. They don't like a gradual increase in rates, but they don't like a spike.
This is a pretty good move today.
With the 10-year doing what it's doing today, that's a spike, Oliver.
Okay, spine's starting to bounce here a bit. I don't think we're making it to VWAP.
Dire scenario.
We might not make it much higher than like 454.
Because stocks don't like spiking yields.
Yeah, we haven't had a big faded rally like this in some time since we've been in this steady melt up, 2 weeks running of Dow strength, breaking all kinds of records. I don't know if we'll be doing that today unless bulls get it together here over the next 50 minutes. One area that is staying strong, though, the chips up more than 1.5%. As the day has shifted, Renita, the leadership has also shifted, handing over to Lam Research after its report as the big winner. I want to revisit that. Walk us through how come this company is the big winner on the session.
Well, this company, of course, is one of the companies that create chip equipment, but Lam Research saw better than expected earnings, and we can thank AI for that, right? But hold on, though, because it does not necessarily tell the picture for the entire chip complex, because we still have the demand that had been slowing for CPU units, for computers, and that story isn't completely told here, but we will hear more of it when Intel comes out. However, for Lam Research, earnings revenue better than expected, operating margins contracted, but gross margin expanded, and the company did issue strong guidance for the year. And also this, the CEO is expecting to see a boost in demand from domestic Chinese purchases of equipment and high-speed memory tools, and then went so far as to say he expects the total market for chip making to be roughly $70 billion for the coming quarters, the coming year. And analysts chose to raise their price targets on this stock, of course. UBS boosted its price target on the stock to 750 from 725, maintaining a buy. Barclays boosted its price target on the stock to 600. Morgan Stanley, maintaining overweight, raised its price target on Lam Research to $720 a share.
All right. Even in this
bounce on BBIG, 11% bounce. Wow.
So much excitement that does require some degree of leap of faith.
GME not getting anything.
From the last 12 months and 6 months and 3 months to the next 3, 6, and 12 months.
Yeah.
Contraction on the top line, just like we saw in Texas Instruments, but forward look has people still hopeful that the adoption of these new services and products are going to require a lot of hardware that can lift the whole sector. So definitely an important outlier to now a down day is Lam and the chips. Thank you very much, Renita Young, Kevin Hanks. Appreciate it, team. Let's talk about the big picture with Jim Carson, joining us from Kai Volatility Advisors, Senior Managing Partner, back with us in studio. Jim, we're getting some weakness today, but of course the market has been surprisingly strong. It's gone against you since the last couple times we spoke.
Not exactly. I think we were pretty clear last time that we would get some type of a pullback at June OPEX. Right?
Okay.
We did that. We got about a 2.5% pullback. Not very exciting, right? But the first pullback we'd seen in a while. And we went out publicly on social media and otherwise. We said, look, the vol is not reacting, right? Buy back your shorts. There's a time to stay long until July 19th.
I'm thinking about the vol up, stocks up, and then the rollover, which we never got. That was like the core of the thesis. So is it still in the timeline? Could it still happen?
The key here, and I want to be very clear, right? We're taking shots in windows of weakness, non-strength, right? You said, why today? Why are we down today? It could be any day, right? Why? Because we ran into July 19th. OPEX positive on a charm flows, right? What do we see? Since then, we've seen a very kind of sideways to down action. That's typical. It's what we saw last OPEX as well. And so that's what we've been looking for. You take those shots. If vol does not react, if you don't see the movements and the other things that we've been looking for, you take your profits, you move on, you get back into the trend, and you ride the flows, right?
Why don't you think it happened?
In June, why didn't it happen? That's actually a very important thing to talk about.
And you're bouncing around SPY. BBIG is moving up too.
Why the Dutch boy with his the dike volatility, implied volatility has been continued to be pinned, right? There's a lot of vol selling going on out there now, right? There's a lot less hedging than there was a year ago, right? We see that across the board, but why has it been so strong and consistent? We're seeing dispersion levels, the constituents of the index relative to the index itself, moving at record levels in line with 2017 levels.
Climbing back
Those are levels that in 125 years of realized volatility that we haven't seen
Nothing on GME.
other than 2017 now. And they're happening for the same reason. There is a vol supply that's being sold to the market. In 17, it was a lot of search for yield that was happening in the form of iron condors, the XIV, amount of selling coming from those ETFs was a huge factor. Now it's different, but it's similar. It's structured products. Nobody's really talking about this, but as interest rates go to 5.5%, right, you're now able to sell a structured product that yields 5.5 plus whatever vol selling gets added onto that. 9-10% yields you can get non-correlated in these products relative to a market that's much scarier than it was 2-3 years ago for most. That's very different than selling a structured product that yields 5% in a market that's been making 15% a year.
Okay.
Structured product issuance is through the roof. Banks are getting massive amounts of vol, selling that to the market. These are not weak hands. These are people who are moving out of the equity market.
Okay.
That has actually created a pin in the S&P 500 where the majority of these structured products are tied, and it's creating a massive rotation around the center.
Where is that pin that you see?
So that pin is vol implied vol altogether, right? If dealers own gamma at the end of the day, they are buying the market when it goes lower. They are selling when it goes higher. They're also selling more vol as it's not performing, as realized vol comes down to the rest of the market, which itself is a circular chase down the market. But that's specific to the S&P 500. In the meantime, you have AI
nice little bounce off the bottom.
Roof, right? Which means other things have to go the opposite way.
You could still get more move before end of day. 45 minutes left.
If certain things have to go up, right, and the index is pinned, that means other things have to, by arbitrage constraints, go the other way. And that's why we're seeing historic rotations, historic breakdowns in breadth. NASDAQ, as we said, starting in March, started a dramatic outperform because of the short vol complex that was there. We called that rotation. We also, as of 3 weeks ago, said, look, it's over. It's going the other way. And guess what? We're starting to see the other way. And that's because, much like we saw with the meme names a couple years ago, right, a year and a half ago, all the call buying made sense for pushing gamma squeezes at first. But once it got crowded and the prices got too high, they couldn't push it profitably, right? And dealers then begin to profit. And as you get into expirations when that decay hits, right, now the unwind of the deltas starts to come back to dealers. So dealers are selling NASDAQ into big expirations as those calls decay. We're starting to see that. We saw that the last 3 weeks, and now we're starting to see the rotation go the other way. It's not a surprise that oil's bottoming, that the bank stocks are doing better. Everybody has a narrative to why that's happening, but why it's happening is because under the hood, the NASDAQ and the vol markets are actually forcing a rotation with the index itself pinned. So this is what's going on under the hood. It's not just AI earnings, right? It's not just the banking crisis is over.
Look at BBBYQ, man. 18% rebound.
We're also seeing narrative now follow price with the market pushing up, right?
Yeah,
and a change in some of those things that we've been waiting for.
A big part of another big part of the thesis, though, that you laid out that we talked about was very macro driven, was something that is sort of out of the realm of the heavy options, convolution. It's something very simple that a guy like me can follow, which was basically the Fed's going to have to stay more aggressive. Rates have to stay higher. It was more of like a strain on the economy that will eventually roll things over, but yet we've kept ripping through level after level for risk on.
Benjamin Graham, right, has a famous quote. Many people here know it, right? In the short term, markets are a voting machine. In the long term, it is a weighing machine. Macro matters. It's not that it doesn't matter. It just matters over longer time frames. You don't ignore macro, right? Because it eventually comes to bite you in the butt. But the reality is we can go on for a quarter, right? And a year even, right? Look at 99. Again, I started the market in 98. 99, 2000, in the last 9 months, the NASDAQ doubled, 100% return before dropping 92%.
That's crazy.
Right? These blow-off tops, which we've talked about, they happen for a reason. Liquidity reflexively is inverse to the positioning. Right?
You think there's still that potential for that kind of
BBBYQ.
blow-off top, even though
we've been seeing it, right? I mean, the market's up 20% on the year.
But we haven't seen the other side of the. We haven't actually had the blow-off. We've had the climbing of the top.
Correct. Correct, right? And the reality is that's why it happens, because it's hard. If it was easy, right, everybody was shorting because of the macro and knows what's going to happen, right? Everybody knew the tech bubble was there starting in 98. But you couldn't short it in 98. If you were long it, but then you missed it, you also lost 80%, right? So the timing is critical. Understanding the flows, understanding these windows, the weeks that matter, the days that matter are critical to getting this story right. The macro matters in the long run. But it doesn't mean
SLD.
you can't
If that's
lose a
playing into
dramatic amount of money
BBIG's run.
between here and the top. And so if we're talking about timing this day, week, you can't kind of sit here and say, okay, this month you were wrong, right? The question is, what's going on with the flows? How do you dynamically move in and out? I wish we were on the air every week so I could give you, detailed moves each week. But we went out on social media. We're very public about buying back our shorts at the bottom there at the end of June, right? And that we were very positive until July 19th. Guess what? Here we are, July 19th, right? A week ago.
So it's back on.
Until you got about 48 hours, right?
Okay. And what do you want to see in that time period?
So today is exactly what we needed to see at the minimum to hold on to our shorts, right? For right now. Tomorrow is a Friday. Fridays are dangerous days, especially in this window of weakness. We're still there, right? If this Friday can fall apart, break below the 20-day in the S&P 500 on a closing basis, that opens the window, right, for continued downside going forward. If it can't, right? If it stabilizes here, if vol, which is up right now, by the way, comes down, which is a positive. The vol being up is an also important factor to keep track of. If that vol begins to decline here in the next 36 hours, call it, if the market stays supported, it doesn't have to be up, but it has to be kind of controlled sideways, small down with vol coming in. If that happens, end of month, beginning of month, Monday, Tuesday are supported because the market is up on the month. There's higher collateral in the market, more buyback coming into that period.
So it's a small window here.
We're catching it at the end, but this is what happens, right? It's never easy. The market, we're not the only ones talking. We're talking about this.
Today.
Right? People know about this. People are trying to play this. So it's always going to be hard. We were up after the Fed meeting, despite, right, was generally viewed as a hawkish kind of tone. Why were we up? The same reason we're up almost every Fed meeting, regardless of what they say, because you get the vol compression for the event, the Vonage charm flows. That's exactly what you wanted to see. People like, we were public about it. You want to be looking to short into that when that happens. The problem is it's not going to make it easy, right? It's not going to happen exactly at the end of the day, beginning of the day. It's going to happen where after people are squeezed, after they're forced to kind of buy back in. And that's what we're seeing. People getting caught wrong-footed, a little bit of a window of weakness, a decline. And this is the window that you play, that you try and take advantage of these things. That's the key. You have to understand these flows, the voting machine in the short term. And that's what we're playing now with the broad macro view.
Right.
Now, that does not mean you do not just bet macro long or short. And that is the narrative that is so wrong about how people manage this market.
The kind of two sides, just real fast because we're almost out of time, but the kind of two forms of sell-offs, and I'm sure I might be missing one or two or several, but the two forms of sell-off that seem to be most resonant in the way I see the market is the melt-up of speculation like we got in COVID and the crash down. That's the vol up, stocks up for a little bit that you laid out to us before. Obviously, the vol stayed subdued. That's what you've addressed here. And then the other one is that macro credit's going to tighten, rates are going to stay higher, and you're going to have more of kind of a recession style. So in those two categories, if we simplify them in those two categories, which right now is most compelling to you? Have we disproved the macro thesis? It sounds like you would argue still no.
No, absolutely not. If anything, that we've continued to reiterate and drive higher for longer, right? Yes, everybody's been talking about recession, and we never talked about recession being the downside problem. It's the inflation in a stickier, stronger demand economy that's the problem. We've been pretty clear about that. It's not the old cyclical game people are used to. It's the inflation and the populism that's driving the structural problems with the Fed. The Fed is in a box. If they continue to be in that box, which
so rates up, still bad for stocks.
Still bad for stocks. Okay. And actually, if anything, more than ever right now, because we're about to break out to a new leg higher.
All right. Hey, you came on a nice day to reiterate the case. Nice fade. It sounded like you said just now, the fade came just in time.
It's almost how it always works.
Yeah. All right. Well, we also, our calendar seems to be right before expiry. So 2 months ago, it was start to dip your toe. Last time it was layer into shorts, but you said, okay, it didn't take. Now it's kind of, you stab again. And if it doesn't take within the next couple days, then you step aside.
I want to be clear. If you're just sitting here trading monthly based on what we say on here, you're going to have problems, right? You have to understand these windows. You have to be taking your shot, right? If it's not working, you got to be dynamic. You got to be active. Follow us on social media. Try and listen to everything else we're talking about. But you definitely want to be active in this market, looking for the macro headwinds, looking for the opportunities to short it. But play long. You're going to get big, dynamic moves at the end of this market when appropriate, and be active.
Okay.
Be water.
All right. So we'll
Water,
proceed.
it could be liquid.
So we got a little shot-taking moment for Barry's here. See if it takes, if vol picks up. Thanks for the update, Jen.
As always, great to be here. Thanks,
All right,
AJ.
Mr. Carson, Senior Managing Partner at Kai Volatility Advisors. All right, there's your trading chat. When we come back, let's talk some earnings. We're going to get into Cal ahead of the report. Can they live up to the expectations building in the semiconductor?
Mm-hmm. Excuse me. That recovery on BBIG is insane. That's got to be some obligations. Is borrow fee still really high? Oh yeah, borrow fee hasn't slowed up. It's actually continued to increase. Wow. Whoops, that's not what I want to bring over. Yeah, this isn't even an inverse cup and handle because you just retraced all the way back up. Here's BBIG's borrow fee, 100% now. Today it's up to 137, and then it stopped reporting at 10 a.m. This is a really good sign. I don't know why it didn't report back here. Oh, this is after the split. It reverse split. That's crazy. Because I could have dip bought. Look at that thing. I'm trying to break out. It's 3:30. I found him on Twitter. It's at Jam Croissant. His name's Kim Carson. It's not John. Maybe his middle name's John. Dude, look at BBIG. Oh my gosh. 25%. Average in, I guess. That's crazy. NTRB. Really like that nutrition. Watch BBIG break the highs today. Anything else waking up right now? Nothing. Sings alone. On a solo mission. Barbecue's kind of held up there. It's down 7.8%. GME just went from bullish cup and handle to breaking out to the downside. So we'll see tomorrow. I mean, it's fighting it. I mean, the market is too. Probably gonna get this big engulfing candle today. PC in the morning. Very well could be the top here. But like he was saying, I mean, it is, yeah, it's the next 24 hours into early next week maybe to see which direction the market's going. The trigger with all this, I think, was that Japanese rates. Like Taryn was saying. NT Nutriband. I'm sketching on going anything like long, being where the market is right now. New high of the day there on BBIG. 27%. Alright, let's go. This thing is single-handedly holding up one of my accounts. The one that got dunked on today by Barbecue. $5. BBIG to 100. I wouldn't be picking up NTRB right here. Not for long term. I don't know, how do they do in recessions? Maybe not bad. Wait, what? The pharmaceutical company? Oh, I don't know anything about this. Crazy move there. Hit 50, 20 on Binko. They have options, you could sell puts on it. Run a position. I mean, it's just 5x in the last month. I know it was from a catalyst, but still. Not quite 5x. TUP bouncing back up to VWAP. SPY getting lower here. Wow. It seems like it's setting up for a pretty red Friday. A turn down next week. Let's see what PC does. Should look at BBIG up there.
Premium terms, this is just over 300,000 bucks. So we know how the long call works. The risk is the amount paid. So in this case, that means you got a $308,000 max loss. Break even, you simply
Might take the long here for the double bottom.
35, you get to 36.54.
Scary though.
So for right now, when you're looking at a stock like Intel that
Market's
trades
so
at
weak.
34.45.
BBIG, new high of the day on BBIG.
Before the break there, in spite of some of the weakness that we've seen envelop the entire market here, it would need a nice move though of just over $2.
540 on BBIG.
Just under 250. So it's all within the
We got
wheelhouse.
$5.60.
What the expectation would be. If it just performed as the market maker move suggested, is a 1 standard deviation range. Let's say we're targeting somewhere around 37 to the upside. So it would be a
Yeah,
profitable
560.
point at that time at expiration, and likely before expiration as well. But bullish because
Should sell calls.
stock goes lower, doesn't move. This
Guess
is a
I'll
max
wait.
loss trade as it sits right now.
Okay, so we got to watch this report, I think, with a bit of a different mindset here today. I think it's with the trade very bullish going in this with a lot of size. Commentary just heard from the analyst, and the strength in Intel, it, I think, has a little pressure to perform better than it has over the last year. And obviously there's some pretty big traders counting on it, because that's, you said 2,000 contracts?
2,000 contracts, and I'm with you in terms of Intel, but it does seem that there's been sort of this shift in sentiment in the market where even struggling companies have been given a little bit more leash the last few months. Intel certainly in that as well, and Intel isn't Carvana, for example, but it's certainly not Nvidia at this moment either. So to see this pretty impressive rally over the last
I just got stopped out on that long.
Goes to show that the
Oh,
market
it's pretty
right
late.
now,
10 minutes for Ghazi coming up.
Investors and participants have felt that some of these risks, execution risks,
TUP made it back to VWAP.
struggles to growth, the reinventing for some of these legacy companies. Some of the worst of that may be priced in at the lows that we saw coming into this year. And with an optimistic look into the second half of the year for a lot of the economy, and particularly with the AI boom, obviously some of that is spilled over into companies like Intel.
Okay. Speaking of legacy players with the new visions, let's talk forward here. Another one after their belt. Going to be really. This is like the old timers afternoon. Intel and Ford, taking a look at even Roku, which is like the old youngin', the weathered and grizzled. I heard your Roku comments earlier on your show. All right. Anyway.
Near low of the day there on SPY. Wow.
Yeah, well, I don't know if you've heard Jenny and I talk about Ford recently, but
Barbecue getting a little pop.
you look at it at Ford, it seems like it's always $14.
Only down 5.5% now. Big intraday moves.
Well, because they sold the 14 straddle, which is the strategy that benefits greatest from a move right to 14, no further in either direction. So collecting a $1.09 in premium, same contract size of 2,000, same expiration of August. Break evens in this case, you subtract and add the credit received from 14. So you get a break even theoretically at expiration of 1291 on the downside and 1509 on the upside. This strategy, though, however, has varying degrees of success.
See if 30 cents becomes resistance now.
What you'll see is that he has an apex that's somewhat triangular, almost like a mountaintop, right at the 14 mark.
Okay.
And then the further away you get in either direction, it's going to basically chip into that max profit potential.
This is a do-nothing trade.
This is the do-nothing trade, actually leading it slightly towards
Nice
that
bounce on that level, though.
level that it sort of acted as a magnet. You can see that risk profiles I described. However, what the key distinction on this trade is versus the other two that we're going to have talked about is buying a call has an unlimited upside potential. Selling a straddle has an unlimited downside potential. If this stock goes to zero, you're of course defined to that $14 net of the premium. But there's theoretically no upside restriction. The same way that buying a call has unlimited upside, selling a call has unlimited downside. I think we can realistically say that Ford isn't
unlimited. If it goes to zero, there's a limit.
Period of time, but it does go to show that if there is a big move in a short period of time, this trader would be exposed to that in either direction.
Okay, interesting. So Ford is swinging around this market this afternoon. Then we know that trader is getting hit because they don't want it. They want it to stick at $14. All right, we're about 25 cents below it right now. Last trade you got, Meta, which is still up on the day. This is a post-earnings trade, of course, because you saw this action from today.
Yeah, and it was early today, too. So these are prices that are long gone, and so it's kind of worked against them now as the stock has came back.
Someone chased the open?
Chased the open, it appears, buying 2,083 of the August 345 calls for a 370 debit.
This is painful to hear.
Almost, or actually over $750,000 worth of premium, so 770,710 is the max loss.
How much are they down right now at 312? I mean, they're getting shredded.
Yeah, I can see. That's what it's trading as 312 now?
Yeah.
Well, you can do the math then. 2,000 times 50 cents. Let's call it like 100 grand.
Okay.
But what you're looking at here is a trade that needs upside, big time. 348.70 is the break even. August monthly expiration. Stock right now is 312.50. So just doing some quick math there, you need about $35 in upside, which for a $312 stock is over 10%. So really hoping that this optimism that is still objectively there with the stock up over 4.5%, but was much more there this morning when the stock was pushing 10% to the upside. Really
flushing here, wow.
For the next few weeks. And maybe none of these other names,
definitely
Apple's
a bit of a
calendar, Amazon still on the calendar.
capitulation type day.
Not, I believe, until a few weeks after, but some of these names still on the calendar, and we can see how, Microsoft is still weighing on this market, even with a big move in Meta. Really a couple landmines, let's call it, to dodge, but if just the general sentiment of today can continue, not entirely unrealistic for this stock to have some more upside.
All right. Nice reporting there, Alex. Appreciate it. So someone's going to hold on for a little bit. I hope that turns around. Rough trade. Okay, we'll see if the Intel trader does any better here this afternoon with the bullish view. When we come back, we'll talk some bonds and the market action here that has hijacked the stock rally from big tech. Larry Shover joins us for that conversation, and then we'll get an update from Ginny on a kind of forgotten name that's on the move today. Interesting catch-up for Quantum Skate.
Excuse me. Sure. Looks like that BBIG rally's over for the day. That's crazy. Too low there. Oof. As a scared market. 451. I don't know if this is I don't know if this can recover. I think we maybe just flipped. I think so. Wow. Look at that thing flush. Whew. 15 minutes to go. Better hope for super bullish PCE. Jump out of longs. This is. I haven't seen this kind of volatility in a long time. I mean, you must have had that shoulder. It was just quick. They didn't need to build any more liquidity there. Head ahead, shoulder, shoulder. That's all that was needed. Because it flushed through the neckline. Wow. So this is done. So I've got a bigger inverse cup here. Forming. See if we get a retracement end of week or next week. Nice ace, well done, man. I mean, you could make money on the downside. A lot of money made in market crashes. Even without options, you can just buy inverse ETFs and stuff. Is it? XPXS, one you could buy to get downside exposure on the market. If you like just buying shares. DRV is inverse on real estate. Kind of just moves opposite of the market more or less. Wait for everything to crash. The thing is, it could take a long time to get to bottoms. And if you have all this cash, you're growing patient, and you're trying to start buying the dip, it keeps dipping.
Another better than expected jobless claims, strong durable goods number, pushing yields higher, but also probably fueled by the policy shift or the potential policy shift by the Bank of Japan this evening.
What do you think they could say, Larry? Is there a real spectrum of outcome for the BOJ?
Yeah, no, there definitely is. You know, as we know, we've had yield curve control for over 3 years in the country. And at this point, like, they're open to talking about perhaps letting that loose a little bit, which is just flying in a lot of like speculation to see higher yields, at least for duration and also for the short term.
Okay. So, all right, if other central banks are kind of meeting expectations, Chinese being easy, Bank of Japan kind of drifting more towards a little bit of the hawkish side. We know there's hikes coming from Bank of England and ECB. Dollar up now about 1%. Does that tell us, Larry, that the Fed's going to have to get back on track, start hiking again?
Yeah, I mean, that's the biggest question right now. We see the dollar higher with yields, and we saw the steeping in the yield curve today. It makes absolutely no sense. But I think behind the scenes, people realize that the Fed could potentially at some point cut, but also
Jumping in some longs here. Dang it, 10 minutes Fugazi. What am I
And so
thinking?
when you have Fed fund futures at the highest they've been since 2001 with policy.
If you have Fugazi up to that 9 moving average.
The Fed a lot of room to do what they need to do. So right now it's going back to it's not the price action, it's more data dependent. And today we had a lot of data that would be considered, at least in technical standpoint, bond bearish.
How much room do you think it has to run from here? I mean, I know last time you kind of trade in this direction, right? I mean, I think your kind of steepener trade is going in the right direction.
No, yeah, it's definitely going in the right direction today. But, you know, to be completely honest and transparent, if you look at the archives, I mean, I've gotten stopped out so many times trying to capture the steepener after having the flattener on for almost 2 years. And so, yeah, today it worked, but I've gotten stopped out 3 times over the past 3 weeks going the other way. I mean, right now, like, it seems like the 210, we're looking at like 90.6 being one area of support and 107.3 being the resistant point. And, you know, we closed like closer to the support level, but, you know, it gives a lot of fodder to people that if the balance sheet could run
the ego
lower
on
while
you.
Cutting rates at the same time, it gives a lot more room for people who are waiting for that steepener to come through, which, you know, people thought that would be a trade for 23. Maybe it's a trade for 24. But all that to say, when the Fed comes out and says we don't expect a recession
Get a
this
bit of a
year,
bounce
we need
there.
to, you know, continue to squeeze.
Maybe it's
the
time for
balance
market
sheet
correction,
without cutting
Barry
rates.
says.
That gives a
Sounds
lot
like
of
a steepener to me.
That's right.
So maybe not next year, maybe a second half of this year, Larry. So a big
Fire Marshal Bill, thank you for the gifted membership. To Taryn.
Thank you.
And always love the transparency.
Wow,
and the
Taryn.
straightforwardness, Larry.
Yamiko.
Now, often you get guests encourage you to go back in the
Yamiko.
records to see when they missed it. Appreciate
Come
that.
thank Pop A's for that gifted membership.
International markets, exchange, capital resources.
You get a gifted membership on top of your puts today. Well done, sir.
Howard and Randy Frederick are with me. Cooper's director and fixed income strategist, and Randy's the managing director, trading and derivatives. Afternoon, guys. Good to see you both. So bonds, as we're talking about, really stole the show here, Cooper. I mean, we're almost at fresh highs for the 2-year. This has got to be getting you excited.
Yeah, talk to your brother-in-law. Get skipped off the top.
I'd say Larry stole some thunder on the bond side of things. But we are seeing
Still. Yeah, there's lots of inverse ETF stink or A's. I just told you one. You have SPXS, which is the short, 3 times bear. Look at this chart. How bullish that is. Big engulfing candle. You have RSI divergence. This thing's gonna start rallying. Market's gonna start selling.
He had said they're taking it
buy
meeting
this
by
thing.
meeting. They're going to be data dependent. Yes, today's data, you look at the
Look into them though, because they are they do have decay on them. Not usually one to hold for too long.
That's trending lower. So
But the fees aren't too bad. I don't know. You have to kind of look into it.
Soft landing. I think what we have to also look at.
All right, I'm gonna close this long. Little profit off the bounce,
one of the big
the bottom.
points that Powell and other Fed members have really said. So I think that right now, just trying to take what's happened today as far as the data that's come out and extrapolate that to meaning that we're going to get a hike in September, I think that's way premature. Like Powell had mentioned yesterday, we have 2 more jobs reports. We have 2 more CPI reports on Friday. Tomorrow we have the ECI report.
BBIG bouncing on VWAP. That thing's crazy.
Or to kind of give us a sign of what is the employment picture look like? We know it's tight, but is there issues bubbling up under the surface that could filter into higher inflation? But I don't think that we're at the point right now to take the data that's come out today and extrapolate and say we're going to get a hike. Nor does the market expect that. It's really only a 20% probability at this point. So very early in the game, I think we're really just kind of settling down from what happened yesterday. And
Yeah, there's lots of different ones
BBBYQ right now.
with varying degrees of leverage.
Can talk about those lagged effects. This is what the issue I had with the tone, not just yesterday, but in the last meeting too, is that they talk about
just look
the
up
risk of these
inverse
lagged
ETF.
effects, but then we're also seeing the data beat the expectations, and then the upswing happening in the economic data. That's, I mean, the core growth data and GDP. And then lo and behold, the Fed says, okay, actually, recession seems a little bit less likely here. And so
Is the court hearing tomorrow too?
Kind of being fair and balanced. On the other hand, though, Randy, it kind of
The
seems
ego
like to
on
me
you.
They might just be trying to cover their bases in a way that
God dang, well done, sir.
I mean, will the pause skip
That's
period
crazy.
have the potential 8 months now.
I mean, out of the, what, 30 people here, how
again.
do you get him? Thanks, Ace. Appreciate the gift of membership, man.
Oh, we got to get Randy's audio there.
Thanks for you guys' likes as well today, too. 34 on the day. 5 minutes to close. 5-minute fingers
He dove right into
slap.
that question, too. I knew it. Go ahead, Cooper. What do you think? I mean, is it possible here that they're making a mistake by being too cautious on the economy?
You know, I don't think that. I think that what
You're
we'll
gonna
do
be
is
closing some longs
hindsight,
tomorrow.
There you go. Sorry, I don't know what happened. My mic went off. Let me set it.
We can kind of say, we can always look back and we can kind of say, well, yes, they should have hiked. No, they shouldn't have. We know it. Looking back this recent cycle, yes, they should have been hiking much more quickly than they originally did. They probably should have started earlier than they originally did, is what I meant to say. So excuse me there.
Sure. No.
But I think that what they are doing, and Paolo's kind of alluded to this, is that they want to try to wait to see what happens with the economy. And yes, things are looking okay right now. So it is the potential for a soft landing. There is the potential risk, Oliver, that I will acknowledge that they do keep rates elevated for too long of a period of time. And then that's when we get into a potential for a hard landing case.
Okay.
But right now, the data is supporting that we could get a soft landing.
Okay, so the risk still in your mind is that they leave them too high and there is recession and undue
The strength of BBYG to close is crazy.
So, Randy, we got you back. Well, I mean, today the market, though, seems to have the other side. Today, with the way bonds are trading, it's like we're suddenly repricing inflation risk again. That'll be the problem. Is that how you read this market, Randy? Number one. Number two, do you think that's a problem?
You know, again, I think like Cooper was saying, I don't think that Jay Powell wants to tip his hand to anything. I mean, the probabilities for September and November now about 20%. Frankly, I wouldn't be surprised to see them do again what they did last month, which is skip a month and then, you know, which would be September. And then when their next meeting comes up in November, and we've got a lot of data that is going to come out over the next couple months, they'll make a change there. But, you know, inflation has come down for 12 consecutive months. And I know publicly the Fed doesn't want to say that it's comfortable at a 3% inflation level, but frankly, I think it is. I think they want to continue to target 2%, and perhaps we'll see 2% 12 months from now. We're not going to see it in 2023, I don't think.
Program?
I just don't think they want to allude at that because I don't think they want people to get
Good program.
with that. But as far as the equity pullback goes, I mean, come on, we've got 100
Picked up 448 puts for tomorrow.
At least 45-year highs on the
When we just sold off like this.
Gains. The S&P 500 is 4% or was 4% this morning away from an all-time high. Things have gotten a little bit ahead of themselves. I've been expecting
it might end up working out. We might get a gap down.
Now it's taken a little longer to get here than I thought, but you know, at this point, with what's happened with the Bank of Japan, what's happened with most of the central banks around the world, I think there's an assumption by equity traders that we're done fighting inflation.
I'm looking for a retrace now.
And that means the markets can be a little
Made this
bit
inverted
more
cup.
organic. We can trade based on earnings, which frankly have been pretty good. This is going to be the trough.
At the bottom now, you can already see it starting to retrace. Getting back to safety though, really. By end of day.
Reset because these valuations are getting a
I
little
think we
bit
could climb all the way back up to 455, 47.
So that's going to take a little bit of time.
You think,
Not sure we'll get that high, but
I mean, it seemed like the market was going to be happy with these earnings until bonds started getting hit today. But to your point, the trough being this quarter, that's a little bit better than expectations from, 5 months ago?
It is, and I think what's going to probably happen because their expectations are way ahead, at least on the earnings side, of what was expected. I think that's probably going to raise the bar for Q3, which was already higher than for Q2. So that may set us up for some potential disappointments, but frankly, that's not really until October. I mean, we're just now in sort of about 45% of the reporting so far in this quarter. So that gives us
already got the buy high.
Of smooth
It's all low.
And I wouldn't be worried about this type of a
Ask
pullback.
me about my barbecue.
This is a very, very small adjustment. We need this really, and frankly, it's probably an opportunity to look at some of these stocks that have gotten a little
bounce here into close, last 30 seconds.
Second, give it a little bit of time.
Very weak close though. Get RSI divergence there.
2 good solid up days in a row. Now, this one could only be a day longer. It might last a week, but wait till you get 2 good solid up days and then start looking for some opportunities.
Okay. All right. Appreciate it, guys.
You might be fired out. Who knows? Who knows anymore?
Both halves of this market today. Earnings looking encouraging.
Hopefully it works out for you, Bubblicious.
Rates, maybe a little less so for
Get a nice exit tomorrow.
What happens tomorrow through the
I don't know if it's going to be that easy.
That'll be very key.
There it is. That's the bell.
Bonds go then. Thanks, Cooper.
The silent bell.
Randy. We do have earnings coming up shortly for
BBBYQ with that recovery.
Nation. We'll see if
5% after hours.
impact of all that concert that was going on. Who was
Crazy.
it? Some singer, country singer, young gal, I forget her name.
Can't believe the strength this thing's had. That's crazy wild. Alright guys, thanks for your support today. Ace, thanks for the memberships. Appreciate the generosity. Let's see, 36 likes, not bad. Thanks Guts. Thank you Christopher. Thanks Cameron. Thanks Bubblicious. Ace, Dink. Aaron. Even if you're just coming in to sulk. Thanks Trace, thanks Macaroon. Thanks Guts. Thanks Psych You Up. Appreciate you guys. Crazy day for sure. A great evening. Sound a bit better. I think it's starting to come out. Starting to cough. Some congestion, so maybe. Black Swan event. You kind of had it a little bit with the Japan maybe raising rates, an unexpected amount. I think that's what triggered this. That's what Taryn was saying, which makes sense. The yen ripped at that time also. But yeah, maybe there's another Black Swan. Crazy day scalp BA. I haven't traded Boeing in a while. What a roller coaster. Thanks Taryn, you too man. Thanks Kitty. Maybe tomorrow I guess. Alright, GG is. Thanks for the support guys. Sub up, like up, comment down. Happy Money sticks around. Follow us on Twitter at HappyMoneyYT and jump on the Discord server. Link for both of those are in the description. Have a good afternoon. The lady all contested right now? Okay, peace out guys.